Good morning, traders. Anthony Crudele here, and welcome to NinjaTrader live in studio with senior economist Tracy Shuchart, Shy Girl, and of course, Jimmy Cagnina, our senior market strategist. Good morning.
Good morning.
So, Liberation Day.
Yes.
Do we really have to do this? I mean, really? Do we really have to do this? I mean, we didn't want to call it. He didn't want to call it Tariff Day because he didn't want it to be about tariffs, right?
Right. So
but
it's Liberation.
So it's Liberation Day. What are we expecting today, Shy?
Honestly, I think markets are in hurry up and wait mode. They're not doing much. We had a crappy come out last night at 4. Huge build in crude of 6 million barrels. And they had pushing at plus 2 million barrels, and oil hasn't moved. So I feel like markets are, if that's any indication that crude didn't even move on that big of a build number, even though you know how I feel about crappy numbers, that tells me that markets are really in this hurry up and wait for this tariff announcement at 4.
Yeah, I mean, we're pretty much where we started the quarter. I mean, we had Q1 start yesterday, and we're right back, really kind of right around that opening range area. You know, we talked about how Bitcoin and Ethereum were up yesterday versus down in the indexes. They've given that back. Bonds, pretty flat today. Silver up 1% again. I mean, that's one thing that I noticed. Natural gas is up almost 1%. Aside from that, Jimmy, when you look at the charts overnight, I mean, anything coming out at you today?
Yeah, no, I think a lot of these markets are bracing themselves for 4 o'clock. Like Tracy pointed out, we have the stock index futures across the board almost down 1%. We have treasuries inching up a little bit, not a huge amount, but enough to catch my attention. Gold is, again, up a little bit. That's not showing any signs of retracing, really. So my feeling is that no matter what ADP is, no matter what MBA mortgage applications or whatever other numbers throwing out at us today, it's all about 4 o'clock. And I think that it's the equity markets in particular are bracing themselves for bad news.
Yeah, I mean, we might as well go to the economic data. You know, we normally wait a little bit to go to it, but we might as well go to it now just to kind of see what we have going on today. I know we have an early number this morning at 8:15.
Yeah, we have
with ADP. So maybe we take a look at the economic data for today.
Yep, we have ADP at 8:15, and survey expects 120,000. And then at 10, we have factory orders, durable goods, and cap goods, none of which are huge market movers. And then, of course, at 10:30, we have crude inventories, which if crude didn't move on API last night, I don't think it's going to do much today on EIA numbers, but let's see what it is.
Yeah. And good morning, chat, of course. Always good to see everyone in the chat in the morning. And we've got a really packed day. We've got Kane in studio.
Yeah.
If you follow me on X, you saw my picture last night. You know, I walked up to him. We went out for dinner, and I was shocked at how tall he was. He's 6'5". He's taller than Pax. And I put that picture. I said I was shocked that he was as tall as he was, and he was as shocked as I was as good looking as I am. That's kind of the interaction that happened. And so we had a great time. I'm a little foggy today. We had a lot of good conversations. We'll be bringing him later in. Probably coincide some time with him and Tanya. We got Tanya in the chat this morning too. Tanya, if that's okay with you, we're gonna have Kane on with you just for a few minutes towards the end of your segment, and we'll chat. Kind of just getting caught up in the industry, and with Kane was really a lot of fun. So very, very cool. We also have another in studio guest that we will reveal later. Or kind of a surprise, or not
exactly.
Yeah, well, we'll see what happens. So yeah, it's going to be a fun day, and why not on Liberation Day? I mean, like I said, we're doing this really. We're if we're gonna do this, we're doing it, Chai. We're just going all in. I mean,
We're going all in on Liberation Day.
We're gonna have hot dogs and hamburgers lined up. We're gonna have a grill party. I mean, this is, we're doing this. But again, when it comes to markets, I think about the first day of the month, first day of the quarter. So look since NinjaTrader Live has gone live, we've gone through like a million different things, right? We had rollover, we had FOMC, we had, and what's really cool is all the traders have done a phenomenal job by staying patient. I mean, how about Merritt yesterday picking that nice little bottom?
That was
and
killer move.
that was really, 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 really good. But we've been through so much, and I think that the market at this point, having gone through all of this, we're in this slosh around kind of mode right now. It's just hard to see any clear direction. I mean, the momentum is still to the sell side. You could feel it in the tape. Obviously, we're down, 1% this morning in NASDAQ or whatever it is, and almost that much, I think, in S&P. But so it doesn't take a genius to know that the momentum's to the downside. But we keep thinking that maybe we found a low. Maybe they could build on it. You looked at what yesterday was. We didn't make a lower low, and overall, the markets, I think, are still very, very fragile for any bad news. I think that's the one thing to me that sticks out in this tape right now is that if we start to go down, I just doesn't feel like anyone's there. I don't know how you guys feel about it. Like, I watch this tape, and as it's going down, I don't watch the dome a lot, but you could see it. It just feels shaky. And it feels like when it wants to go down, there's just nothing to stop it right now. And, it needs good news to go higher is basically what I'm saying.
It needs really good news to go higher. I think everybody's I feel like either people are not participating and they're waiting till after tariffs to put on, some big positions so that, I think, not that we had a double bottom, but we kind of had a double bottom. So I feel like that could rip through completely if we continue down.
Yeah. I mean, and Jimmy, what do you see? I mean, you're looking at the charts all day long. I know we're going to get to your charting segment, but just what do you think sentiment is right now when you look at the tape across the board?
Yeah, I mean, I think it's negative. I think, ever since we hit that high in the E-mini S&P as an example, in February 19th or whatever date that was, we tried to retrace back up to that 50% level. I don't know, that was around the 25th of March. And then we kind of broke down, and then another failed retracement back up at that 23% level, which is 56.63. That looks like it's failing. I have a short-term anchored VWAP there that's acting as resistance. So it just seems to me that every attempt to kind of move back up it just fails, and it fails at a lower and lower level. So, I still have PAX's 5509 on my radar screen. I have it on a blue, highlighted line on my chart.
Yeah, I mean, and he talks about 5617 as his quarterly pivot, and we got Pax in the chat this morning, I know. And he talked about how yesterday, I'd even talked to him. I called him. I said I sensed something was up with him, and then he had put a tweet out how he didn't trade the greatest around these areas, and really because it's again, I think right now there's just no. I think it's really good for short term. If you're a short term scalper looking at both sides, I think this is a good tape for you, because if you find a little bit of nuancing, within the tape that where you find something, like go back to like what Merritt did. Like Merritt I thought he traded the tape really, really well yesterday.
Oh yeah.
And patient, wait for his signals. No bias, could be long, could be short. I think that's just the way you have to approach this. I know some people would say that all the time, but I still like to have a bigger picture leader of direction for me on a personal note, and I think a lot of other traders probably do too, where you have, okay, look at, if it's more of a sell the rally, I'm going to be more focused on that. If it's more buy the dip, I'll be more focused on that. I think right now in this area, I would still lean a touch more to the sell side just because of momentum, but you can definitely trade both sides of this tape. So I think for day traders, it's good. The key is just not to overtrade it,
Absolutely.
This 815 number today, I know we're almost 5 minutes out from it. It's you said something about this ADP versus another.
It's just ADP employment change. So we'll see the expectation is 140,000 jobs. Last time we had ADP was they thought they had jobs at 183,000, and last time it came in at 77K. So that kind of shows weakening of the labor market again. And if you remember, kind of bounced on that number because everybody thought, ooh, labor market's weakening, Fed's going to cut. So we'll see what happens. Again, 140,000 expected. We'll see what it comes in at. If it's lower than that, then again, that's another sign of a weakening labor market.
Yeah. I'm so glad also April Fool's Day is over.
Oh,
I mean, what is up with everybody doing this? I mean, it's like, I can't get over how many people participated in yesterday. I'm almost a little embarrassed for them. I'm sorry. I can't go out there like I do. I see this. It's like I'm reading stuff, especially Andy Constant. He got me. And I tell you, I can't wait to have him on the show to talk about this.
I'll definitely get him.
Yeah, I mean, it was like, come on, man. Who needs this? You know? We got T-Trades in there. Who knows? Today's going to be an interesting day here on NinjaTrader Live. Aside from that, when I look at the tape, the only thing that really comes out to me this morning, the only thing is that is silver and gold remain bid. If I look at what's a constant every day right now, like when I look at this tape, I look at a lot of things. I mean, dollar's relatively a little bit soft today, but silver and gold, man. I mean, and Shai, is there just anything? Because these are markets that really have macro backdrops. Like they, I mean, I don't know how you can use macro stuff for S&P and NASDAQ. It's kind of, I mean, it is what it is. I mean, it's definitely a much more difficult scenario. But silver and gold, there's real stories behind them right now.
Yeah, I mean, absolutely. We have silver, which is not only a precious metal, but also an industrial metal. We have a huge deficit of 240 million tons, and that's only expected to grow because of, again, the industrial uses that it has. And then really what's interesting about gold is that it seems like retail was kind of late to the game, like ETF buyers, right? And so we're seeing suddenly, in just the last couple months, this big inflow into those gold ETFs.
So you think that retail's late to gold? Because I feel like, I mean, maybe because I'm down here in Boomer Town in Naples, everybody owns gold.
No, in Boomer Town. No, I think that, and a lot of people have been very bullish gold, especially on Twitter. But if we look at actual flows into the ETFs, we're just kind of starting to see a lot of, I feel like people are late to the game a little bit. But, it keeps pushing up prices higher, and we're still seeing a lot of central bank buying as well.
And you know what's interesting about gold right now versus a lot of other times when you see a downward tape, it's actually acting like a hedge. Because people, I remember growing up in this industry where people are like, oh, buy gold as a hedge. And I remember in 2008, I had a bunch of stocks, I'm buying a bunch of gold, and I'm just getting hammered, and it's just going down with the market. So you're not seeing a sell everything moment now. You're actually seeing,
Right.
other parts of the market work. We've talked about how overseas people are buying, China, people are buying a lot of Europe. So that is working as a hedge against U.S. stocks, which I also think even creates more of a bearish case for us for now because the flows continue to be out here and into these other places. Only a minute before we get to your edge report, Jimmy, and we're going to come to it just a skosh late today too because of this ADP number. But gold and silver, I mean, you've been looking at the charts. I watch you every day in the Edge Report, again, up overnight. Just any quick thoughts before we listen into Shai for this ADP number?
Yeah, no, I agree with what Tracy says. I think folks are jumping on the bandwagon a little bit delayed from the rally that we have. I think that 3,200 level, that psychological 3,200 level is the next target. I wouldn't be surprised if we get there. There's no signs of this market retracing or coming back down whatsoever right now, and I expect it to continue.
Yeah. And I can't wait to see when, after this number comes out. And I know this number may not be a big market mover. We're 15 seconds away. Just jump in whenever it comes out, Shai. But I do think, it is at least some morning news that could move us a little bit. And again, still kind of first quarter trades where they're buying silver, gold, selling equities.
Higher than expected.
Better than
155,000 expected was 120, and prior was 77,000. So much higher than expected.
What does that mean, Shai?
So that means no Fed cut. No, it just means that the labor market's picking up again. This is it's kind of lagging data, right? And so I wouldn't look too far into it. The market's going to look at it, but it came in stronger than expected, and so now everybody's going to be really watching
Unemployment
on Friday.
Yeah. I mean, the market does not want to see strong jobs right now.
No, not at all. I know.
Well, all right, let's go to the charts. Let's go for this morning's Edge Report with Jim Cagnina.
All right, let's start with the E-mini S&P up on my screen right now. Daily candle, Mentor Q stats, gamma condition negative, option activity surprisingly low at a 1 out of 5, volatility neutral 2, seasonality slightly positive 2, and then a 1.14% expected daily move. You can see I drew an anchored VWAP just from this recent little sell-off that we started on the 26th of March, and we're just bumping up against it, and it's kind of touching that 8 EMA as well. So price is trading below that 8 EMA right now, which is in my mind not a bullish sign. Drilling into a 30-minute chart, we see JAX1, the big gamma exposure level, 56.25. We're flirting with it right now, tapping at it a little bit. We no real trade lift on the number that just came out. S1 is kind of the next target at 56.16. And then below that, we have that one-day min, that Mentor Q one-day min calculation at 56.10. So those are targets on the downside. On the upside, well, there's the 0 DTE and 0 DTEH put support as well as high vol level. That's approximately 56.50. Point of control, interestingly enough, is pretty robust, way up here at 56.67. We have decent volume at 181,000 traded so far this morning. But this is looking like a lot of downward momentum. We'll see if we get that retracement back up. Pivoting over to the micro NASDAQ for all of you micro NASDAQ fans. Similar conditions at Mentor Q, gamma condition negative, seasonality slightly positive at 1, momentum neutral at 3, volatility neutral at 3. That surprised me. Option activity low at 1, and then a 1.42% expected move. That JAX1 level, I'll show it on an intraday chart in a second, is at 19,800, where put support is at 18,800. That's a huge range. That's 1,000 points, right? So that kind of surprised me. That's why I wanted to highlight it a little bit. But this is systematic. It's looking exactly the same as the E-mini S&P. We're, from a chart by chart basis, everything is flowing south. JAX2, we just traded through it. We're still trading through it. S1 on the pivot, next step, target down for me, and then that one-day min number from our friends at Mentor Q, just slightly above that 19,320. And just to kind of show you the downside potential here, previous session's lows, area of interest, S2, area of interest, and then that put support that I just mentioned, 18,800 is way down here. So we'll see what happens if we revert back to this point of control. Very possible. I don't know, 19,578, give or take a couple ticks. A lot of volume up there overnight. But again, this volume profile is still immature. This is from I'm calculating it from the actual open last night. I guess as the young kids refer to it as the Globex open. Let's just shoot over to gold really quickly here because there's some interesting things brewing on gold. Gamma conditions positive here, not surprising. Options neutral at 3. Options activity neutral at 3. Volatility high at 4. Momentum very high at 5. Well, you can see that from this daily candle. Slightly seasonality, slightly positive at 1, and then 1.14% one-day move from Mentor Q. I have a couple of extension targets here. We wicked to that 76.6% perfectly. The next step up is 100% at 32.27, but we have to get through that 32 even number, which might be achievable sooner than later. On a intraday chart, we have that Jack's one level, a gamma exposure one level at 3150. And, we've flirted with that all session long in the Globex session. We have a high vol level, 0 DT at 3140. We wick through it once, but really, I think the bottom of the value area here is kind of showing, and I'll throw a rectangle up really quickly here to help my primate brain here visualize this. But, and you could just even extend this all the way back. We haven't had a body of a candle trade below 30, close below 3143 on a 30-minute basis. So this is a really nice area of support on the downside. And you could say the same for the upside here as well, because I could draw the similar rectangle up here around 3164. So range bound right now. We'll see if this volume profile kind of matures a little bit better. We have a double distribution, if you use your imagination, with competing point of control at 3161, the actual point of control down here at 3146. That is the Edge Report. Back to you in Naples.
Shy, this tape is just grinding lower.
I know. I feel like it's like a slow drip. It's hard to imagine anybody really wants to step in and buy this market ahead of this announcement is kind of what it feels like. It just feels like a slow drip. Scalper's paradise. But,
Yeah.
but other than that, I just don't, I feel like people just don't want to step in front of this right now and in front of this announcement and buy.
Yep. And you know what's different? I talked about this yesterday a little bit about this tape versus the tape that we've been in. Pharm and I, we're going to get to market environment. We talk about this every day. Everyone's been trained for when the market's really quiet and it's like this, there's not a lot going on. Obviously, you have an elevated VIX, but so it is a different scenario. But we grind down now in times where there's nothing going on versus grind up. And I always look at that because it tells you so much about really the psychology of the tape, right? And the rule on the trading floor was never sell a sleepy market, and there's lots of different ways that people talk about that saying. Now, when the tape gets quiet, it just kind of just grinds lower. And I know today could be, like we said, people just not getting in the way of stepping in front of this announcement today at 4 Eastern. But I still think when I look at the way the action has been, every rally just seems to just fizzle out. I mean, it never just sits up near a high. Versus in the past, we would be like, you'd have one sell-off, market would go down, it'd grind back up, and then it would just sit there and grind. And you're like, now we're spending more time on lows than we are on highs.
That's why I think that, and we talked about this before, that low may not be the low.
Yeah.
Right?
We keep wondering if it's a good low or not. And we're going to talk with everybody about it this morning. We're going to have Pharm at 8:30. We've got Tanya at 9. Then we've got a crossover with her and Kane. Then Kane trades live. And then we've got a special guest that we will, maybe, I don't know how we're going to announce this.
I don't know either.
It's going to get interesting. It's going to get fun. So all of that comes up right around the 9 o'clock hour today. And again, good morning, chat.
Morning, guys, in chat.
Bullish or bearish today? I'm going to be curious. Yesterday it was a third. Tanya was commenting on how smart the chat was because it was like a third bullish, a third bearish, and a third neutral. Vote in this morning's poll, please. Also hit like and subscribe. We talked about this yesterday. Over 5,000 subscribers since we started just 2.5 weeks ago. We can't thank you enough for that. And
looks like everybody's bearish today. I just took the poll. So I got the answer.
62 votes already. Yeah, 53% bearish. Yeah, neutral. And we'll see what this turns out over time.
Let's see, somebody just asked you if it's the possibility that a supercomputer with AI is controlling all the markets.
just keeping us like this? Yeah, I mean, it's, who knows what the world of AI brings with us. What's so funny is that I did futures radio shows about artificial intelligence and markets 10 years ago.
That's crazy.
I mean, these were at the FIA events. I met so many different people. So it's like, this is not new to the market, right? It feels new because AI is what it is. I mean, it's AI
So
is.
far,
I mean, I use ChatGPT a lot. I like it a lot.
I like it too in Perplexity. I know that there are several like AI hedge funds out there, but none of them are actually doing that well because I just don't think AI is there yet. But I'm sure that we'll enter the trading world in a big way at some point.
You know, it's so funny. I mean, I was obviously around at the beginning of electronic trading, and you look at where we are. So E-mini S&P came out in 1997. Here we are, 28 years later, and a lot of what applied even at the very beginning still applies now. You still have traders that come up with great indicators, and they find different ways to make money in the market using either traditional indicators or some of these new methods you see, but it's all very similar to even what it was before computer trading, the thought process, you just be able to do it on the screen. I don't know that necessarily always goes away because the human element, I mean, I could see AI strategies being built, and just like which HFT was hot, and it's still always going to be hot, but it's always just going to weed everybody out. It's just these battles. I still think that if you, as a trader, can find some edge, I think that, and you could find what works for you, I think that will always be, I think, a better path for even for people like myself or people out there than versus like trying to get involved in creating these AI strategies. And I think that, I guess ultimately what I'm saying is the root of this business, the fundamentals, they're always going to work, right? You don't need to have some kind of crazy system or create something that's, with all this technology to compete in these markets. I think the simplest things work.
Oh,
and they always
absolutely.
will.
Because it's again what you said. It's psychology. They're traders trading the market. I think candlestick charts literally tell a story about market participants, right? You can see order flow. And I remember when HFT first came out, and everybody was like, "Oh, trading's dead."
They were spending tens of millions of dollars, all these people, and it slowly but surely weeded out so many of them. And I agree. Yeah, Jim Simmons. Is it Simmons or Simons? I hope I don't get this guy's name wrong. The great Jim Simmons. About with math. It's funny. I didn't even know much about him until I read that book maybe about a year and a half ago. But it was pretty incredible what that guy did. I mean, he kind of knew a little bit about markets. So yeah, but ultimately today, I think that it's just really going to be a wait and see day. Got to be really patient, and just really just see what's going to come out throughout the day with this little bit of data. And later on today at 4 Eastern is going to be the tail of the tape, I think.
Exactly. I mean, right now we're just ripping. Ripping down.
This is PAX is 5617, and this is that quarterly pivot that he talks about. Mine is 5680. So if you look at overnight high to where we are today, we're right in between my level and PAX's level.
So we will see.
Yeah.
So we will see. And again, I'm surprised silver kind of gave it up a little bit.
And the 10-year is breaking out to the downside, down below 4.1. It's down at 4.1. So the 10-year continues to go lower on the yield. It's the lowest it's been since, it's the lowest it's been in this month, right about there, but it's getting near the lowest it's been since December. So as the equity markets, as we go back to this is the theme at the beginning of the quarter, beginning of the month that I look for. What are the inflows going to be? They set the tone. People that have to do something are doing something. They're buying gold.
They're buying bonds.
They're buying bonds. They're buying silver, right?
Yep.
Those markets are staying steadily in trends. Equities are remaining bearish, and that trend is not just disappearing, overnight. It's just not. It's not going away. And I think that I talked about this yesterday. Psychologically, people were trained always to buy the dips, And I own a bunch of stocks too. I don't like seeing the market go down. Obviously, I bought some Nvidia a couple weeks ago. Bought a couple other stocks that I've been, playing around with. And like I have like 3 piles of way I trade money. Some is invested, I never touch. That somebody else does that. Some are stocks that I trade. And then I've got my futures and my options. And I've been slowly but surely getting into some of the bigger names because like Nvidia. And those names have been beaten up so bad. The more I was looking at how much percentage-wise they were down versus the market, that was the other thing. We haven't really talked about that. They're down such a greater percentage. Like this market, what are we down percentage-wise for the year? I don't think that much. 11% in the S&P maybe? Something like
not
that.
that much. But
versus what the major Mag 7, a lot of them are down, a lot more than that.
oh, a lot more. I posted a chart the other day. I'll repost it. I can find it on Twitter because their search is so bad. But really, overall, it's all been Mag 7 that have given it up. And actually, everything outside of Mag 7, the market's up like 0.4%. But it's Mag 7 bringing the entire index down because it's so heavily weighted.
So what is that again? So you're telling me...
So everything, like if you take out Mag 7, the market's actually up 0.4%.
And what that was as of what, today or coming into yesterday?
This was as of last week.
Yeah. I mean, it just goes to show you how tied we are to those stocks. But again, if we're tied to them that much, I don't know what average percentage is. Maybe we find out about that. We look at that. I'm just curious for my own thoughts, like how much those stocks are down versus what the actual market is. It's something that maybe we'll come back to.
I'll have the answer later.
Somebody says the SAG 7. Well, coming up, we have my boy Pharm here. Tracy, it's been great. We'll see you later in the day today. You'll be hopping in Kane's stream and maybe a special guest that Kane has today. I don't know. I can't speak of it. We can't.
Such a tease this
morning. I know.
Morning.
Well, I don't know what to tell you. It's coming. It's coming. So you'll be popping in for data. And again, thank you so much this morning for everything. All right. Pharm. Let's get ready for the man, the myth, the legend. He's got white on today. I think that means he's neutral. I don't know. We'll see. Good morning, my brother.
Good morning. How are we doing, Deli?
It's interesting, Pharm. A few things in the conversation this morning. First off, talking about the tape, how it's just been grinding down. I mean, it's one of those things where this is what's different about the tape now than what we had, right? We always have to trade the tape that's in front of us. We always have to trade the market that's in front of us. We all know, we all talk about that almost to nauseum, right? That's where traders are very focused on today. We're very focused on the next trade. But this tape is different, right? And it is, you could see it because it's like, even you and I, we've talked about it, holds these levels, and then maybe if it gets above this high, you could gain some traction. But when the markets just get quiet and there's not a lot going on, we grind lower.
Yeah, it's a very, very different tape. And I mean, if you think about it and you just go back and look, the last few years anyways, we've had relative certainty. If you're a market participant, you had a consistent president for obviously 4 years. You knew kind of what that policy was going to look like for the most part. Since October of 2023, both the Fed and the Treasury were effectively, very supportive of equities. There was just, participants had some level of comfort in knowing what was coming. I mean, you can fear, a potential recession or war. Like, there's always things to worry about. But I mean, you kind of knew where the big players were in terms of policy. And you get a new president, you get a new administration. You've got a Treasury Secretary who's effectively said, yeah, guess what? Stonks can go down. And so it's a little bit different now, right? And there's uncertainty. And that's kind of why in December I was thinking that, it made sense for some chips to be taken off the table. And we're definitely seeing that. And until there's clarity, I think, around policy, I think you're going to continue to see some of this indecisive action, mostly grinding lower. It makes sense to me, and I mentioned this earlier in the week. I mean, it kind of looks like we want to head back to 2024's VPOC ultimately, whether it's now or later, and that's right around 5250s, let's say, on ES. And the reason that makes sense to me is because that was the price at which greatest volume transacted last year, the fairest price, some people would say. And so when you get a whole new set of Treasury and the Fed's, the same, but they're going to respond differently to the administration, different administration. Kind of makes sense to me to head back there. But it is very, very different tape. And I believe that until there's some level of certainty and we can really clear out some of the uncertainty, I think we're going to continue to see this. Doesn't mean it'll be down only. But I think we're going to continue to see this back and forth and some of this gross action.
Yep. I mean, let's go to my charts and let's dig into it a little bit. I want to start off today with the 10-year note. And the reason is, and I know that everybody's so focused on equities. I get it. We know majority of the day traders, myself included as a swing trader, are looking at S&P, NASDAQ. But you got to take a look what's happening in the bond market. And I find it to be very interesting right now that the 10-year is on this low. We talk about no such thing as a double bottom. And I know the purists out there that are interest rate traders are going, Anthony, do not chart the yield. Come on, man. But I am because when you look at this is actually, you could trade this at CME Group. This is the 10-year micro, and this is the actual yield. It's 4.12 this morning. If we start to push below there on my chart, this is bearish. And I could see 10-year yields getting down, sub 4% if we don't hold this here. And, you wonder what that means. And that just means, everybody, so if the bond market goes up, yields go down. So if I were to just go over here and pull up the 10-year, you'll see that the 10-year is it's grinding higher, right? And so why that matters, I go back to it. Beginning of the month, beginning of the quarter, especially beginning of the quarter, the people that have to do something, they show their hands early on and they start to buy things that they want to buy or have to buy, right? So there's multiple reasons why they're stepping in here, right? And a lot of positions are set at the beginning of the months, beginning of quarters. They're buying bonds, they're buying silver, they're buying gold, right? And that's just a consistent thing. Yesterday we came in and we saw equities to the sell side that got bid up, but then ultimately we're right back down here again. They can't sustain it. There's not real volume behind it. I know we're waiting for potentially what happens later with President Trump at 4 o'clock, but you got to keep an eye on the bond market. I just think it's super important, and I don't care if you never trade a bond, keep an eye on it because I believe it's important. Also keep an eye on gold and silver, because if those flows continue to come into those markets, I do think that does add an underlying offer into equities. Now, when you look into the S&P, for me, it comes down to 5680. I've said this for the last, week between you and I. If it cannot get a daily close above it, and I have my 821.34 moving averages, I don't use moving averages to get me into trades. I say this all the time because it's important, and we're just trending lower, right? It's just simply trending lower. And so many people probably still trying to fight it and trying to hold on to longs. And the thing is, you could be, in the past, I used to say in the bull market, you could be short, but you can't stay short. Now it's like you can be long, but you can't stay long, because every time we get quiet, we grind lower. Until I see closes above 5680 and really starting to get above this 8 and 21 moving average, which is right around 5710-ish, if we start to get above there, then I think a rally is sustainable. But if it doesn't happen, man, I kind of go back to where I think that today, unless the news is really good, so let's just say that comes in and everyone kind of has this expectation of what tariffs are. I think it's like 20%. Let's just say it comes in somewhat in line. I don't think that that's going to be bullish enough to get this market going. I still think that the price action itself needs a lot to work out. I think the tariffs are just kind of sitting behind the scenes right now as a catalyst to wait, unless they're really bullish, which could be. They do far less than we think, which I think the market needs. The tape is still telling me that it's bearish. So I think that you need a really kind of a surprise to the upside for the market to get going. Also, when I look at NASDAQ, it's the same thing. It's even, it looks even worse to me. 19,838 until we get a daily close above there. I'm bearish. I think that we're going to see 18,000. And I think that Kane has been saying 18,000 too. I know he's long puts. We talked about this last night at dinner. Remember, Kane is trading live today with us in studio. 18,000 is my target if we don't close above 19,838 in NASDAQ. No position for me currently. I should go back to S&P again. My target's 5311 until we close above 5680. Until then, I just think we're headed down there. I think another new low is likely to happen. And then Russell, when I look at the Russell can't go higher in a low interest rate environment. What does that tell us about the underlying market? It tells us that the market is weak, man. Right? I'm not even going to go to the dirty 30. But again, when you look at the indexes across the board, nothing speaks to me when I look at the charts in a very simple manner, bullish. I think today we're just kind of kicking the can down the road. We'll wait and see what happens with this, Liberation Day at 4 o'clock. But unless it's really bullish, I think the charts remain bearish. That's all I've got. For me, I keep it super simple, everybody. It's like I just want to see the one direction off of the daily charts where I'm looking at. And for me, it's like no rallies being held. Why would I want to commit to any sort of long swing position for me? Because that's the time frame that I trade in. And that's all we've got for me, Pharm, for charts.
Yeah, I mean, I think that's right. If you get some good news, it doesn't change the fact that you've got many, many months of bagged longs sitting up above us, right? And, we've been talking for weeks about, seeing that big washout. And to me, the best way to not have to deal with going back through that supply up above us is for them to just puke it out into the lows. That's the absolute best way. It's going to make it a lot easier to go back up and trade higher. Message to bulls that are still holding on from 6,000s, 6,000 plus, how when you're nauseous, and then you finally puke, you just feel so much better. You're going to feel a lot better if you just let it go. If you just let it go. And because I do think that once we find that capitulation low and a complete and utter washout, you're going to get a fantastic move. You're going to get a fantastic rally, probably 7 to 10%, like in a couple of weeks, something crazy like that. And then the question that everybody will be guessing is whether it's a bear market rally, or if it's not a bear market and it was just ultimately a correction. But you can't make an assessment about correction or not until much later. So when people say that we got to 10%, so that's the correction, well, now we have a lower high. So yeah, it's a tricky spot. For me, the spot has been, these 57.30s, let's say, and I've tweaked it each week, but we talked, a couple weeks ago, using 57.26 to 57.33 half. I want to see 57.40s. Like, if you just want to kind of make it simple, call it 57.40. But like higher highs and higher lows, then you're breaking away from, sort of all of this volume. And now we're starting to talk about some trapped sellers if we're back above there. Now, there's definitely some trap spots here. And then we could just sort of fill out into a multi-week range here. We would still need to take out this high. But to me, at least, to get constructive, I would say bigger picture on price, I'm going to need to see us clear 57.40s. And I mean like higher highs and higher lows, not like a 5-minute wick. So it's definitely in trouble right now. Like in terms of, for this week, we've talked about how, bulls are trying to put in sort of a double distribution week. And it's sort of sitting right in between there this morning, and that's where it tagged. I had used, yesterday was like 17 to 24, I think I was using, or 27 maybe even. Today I kind of dropped it down to 12 to 24, I think. And it's kind of the same deal. So yesterday we saw that quick trap below, right? We just absolutely ripped out of there. But we definitely saw a fairly decent seller come in around your 56.80 spot, actually, and just really just sort of broke things down yesterday in a pretty meaningful way. Just the bid made some attempts that had no shot, was just completely and utterly smothered. We got this rally, and I was actually a I was done for the day and I was in my daughter's school. But, somebody mentioned that there was like some news that the announcement wouldn't be until 4 p.m. And that's kind of what caused this rally because of, potentially some repositioning in in hedges. I don't know. I didn't see it. But doesn't really matter a whole lot. You can see that we just kind of came right back in those 80s, 90s and just sort of stomped it back down. It is an overnight session. And so, your tendency is to be like super bared up when you come in and you see this. I mean, again, it's technically holding, what I would have is my line in the sand. But I do think we're sort of back to that spot, from a couple of weeks ago, where you and I talked about, I'm not sure you want to give back a prior day low at this point. Sellers, have just, each return down in this area. There's been covers. So like if you were trapped, we talked about this yesterday, like, and why, this works, that if you're trapped short down here, price returns, you have a chance to get out of break even and you cover. Well, I mean, guess what? You've had your chance to cover, here overnight yesterday. You had your chance to cover here if you wanted to get out. And so now, where's the inventory? Well, potentially the inventory is, trapped up here if we can get back down below these, 56, let's call it 56.12. And then, of course, through a prior day's low, lower highs and lower lows. So, for now, it looks terrible. We've bled out a whole bunch. I'm generally bearish until 57.40 plus, but I'm also not coming in saying like, I'm going to short the open right here necessarily. So, let's see if bulls wake up for cash session and they have something different to say, but very much watching again, USD JPY and to your notes, and they're kind of doing the thing again this morning and like they were yesterday. And if you look back at yesterday, what happened is, through this sell-off, USD JPY was getting smoked. 2-year notes were bid. And then what happened is USD JPY sort of, peaked below its overnight low, and 2-year notes peaked above its overnight high. And then they reversed back into range. And that's exactly what the index did. So at every critical inflection point, I'm peeking over, taking a look to see what those are doing, because, again, if this is going to be a bearish day, I can almost guarantee, you can't guarantee anything, but I can almost guarantee that you will see continuation lower on USD JPY, and you will see 2-year notes scream if we're seeing continuation below here. And if not, then, maybe nothing's doing. And if they pull off and they're not sort of screaming at you, then, maybe we're just going to hold balance and maybe we can come back up in here. And again, this is all overnight action. So, if cash really wants to, they could come back up here and, if they can get these back up above, let's say, 35 to 39, I'm using 36 to 39. There's no reason this can't rotate back up to the 50s. And then it sort of opens up, all of this. So looks horrible, but we're going to have to see how we open as always.
So, chat, I'm going to go to you guys. I mean, so far this morning, 370 votes on the market outlook today, 53% bearish, 21% bullish, 25% neutral. Please vote in the poll. 372 votes already. Also hit like and subscribe to the channel as we come to you every morning, Monday through Friday. Today we've got Trader Kane coming on. He'll be on with us momentarily. I see a lot going on in the chat, seeing if he'll sing. We'll see. Who knows, Pharm? Like I said, I think we're putting the band back together. Everyone's talking about the singing. I don't know where this started. Actually, I think it was Tanya that started this with the singing. So they haven't asked you and I to sing yet, probably for a good reason. But yeah. Going to you in the chat. Do you guys think this is a bull market, mean reversion move that we go right back into a bull market relatively soon? Or do you guys think this tape has just changed? Are we just in a bear market now? Which, it does change things from a day trader perspective. I know everyone's like, oh, who cares if we're in a bull or bear market? Well, bear markets, fortunately, the best years of my trading careers, a lot of them have been in bear markets, just because the volatility is up tremendously. And I think a lot of people still are looking for this to kind of end and go back into this bull market, again, because of what we've been trained in. And so I'm just curious what the chat thinks about that. But yeah, Pharm, I think, when I look at your charts, again, the volume profile massively helpful to really get an idea of not just when people are spending the time there, how much volume is being built. And every time we get to just under the 10-minute time frame, I go to you and say, frame out the day. What are we looking at coming into today? We've got the open about 40 minutes away. Let's maybe go through some scenarios with S&P and maybe NASDAQ as well, if you're up to it.
Yeah, for sure. Actually, NASDAQ doesn't look quite as bad to me this morning, but I mean, the last time I said that, NASDAQ went straight to hell, so that was kind of fun. But yeah, so I mean, to me, this is a spot. Basically, just call it this low, this overnight low, right? It's going to be a major spot for today, and so if we're cracking that, and we've talked about this a number of days. If we open, we drive through the overnight low, we drive through a prior day low, and we just keep going, cover the buy button, because every single time we've seen that since mid-February, it was just kind of lights out. And so that to me is something that's quite clear. So I'm not looking to buy any dips if we open and drive lower until much lower prices. And frankly, in that case, it would probably still be safer to wait until you're back above 5630s. So if we get that opening drive lower through the overnight low, through yesterday's low, lower highs, lower lows, then I'm looking to be short until bulls find their feet and find a bid. Now, again, we're sitting kind of right at this spot, and it could hold and is holding for now. And so, we've got 40 minutes-ish until open, but you've got an entire night of longs, anybody remaining long that's underwater. You've got a lot of buyers from yesterday that are underwater, up in those 74s to 80s-ish is where kind of a lot of volume transacted. So I'm very cautious. So if we do come up here, and let's say we can base above like 39, we probably get a clean rotation up to like 53 to 55, maybe. Back above 55, then I think we're talking 75 to 80, probably. I mean, this would, I mean, if you're short in here and we're back above 55, like you're just completely and utterly hosed. So that's what I would see. This is just the major spot. So, I mean, if you want to work against this for longs, I think that's okay. But at least as of now, the session trend is very much down, and that could change with the cash open, of course. So I'm always assessing, the session trend, whether it's Asia, Europe, or the cash open. And so I'm watching you've got traders that look at the 30-second opening range. Some will look at the 5-minute opening range. Some look at the 30-minute opening range. I kind of look at the 5 and the 30 and then ultimately slide to the 60. But, that 5-minute opening range, because, I'm not a scalper, so I'm not trading in the first like minute and a half of the open, right? So I'm looking sort of for bigger moves and bigger indications. But, if you see us come in and we make an attempt to drive higher, because right now everybody's short, and you're seeing some covering here. We make some attempt to drive higher, establish a 5-minute opening range high, and then just knife down through here, lower highs, lower lows, never revisiting that 5-minute opening range. Then, again, through the overnight low, through yesterday's low, hands off the buy button for a bit anyways, right? Until bulls really have a chance to find their feet. So I wouldn't mind a rally from here, at least some covering. I mean, we did add some puts up here yesterday based on some of that selling that we saw. So I'm definitely not messing around anywhere near the 75 to 80s if I'm long. So, again, you can work against this spot potentially as sort of a line in the sand, try to get a long off up to maybe like 35, 39-ish area would make for a decent trade. No longs if we're going lower, already said that. And then, maybe back above 55 could start to look maybe a little bit squeezy. I'm going to pull up the 30 on NAS just real quick. Let's see. So here's the profile on NASDAQ, and kind of why I said, like, maybe it doesn't quite look as bad. If you map out, the primary distribution for this week, so I just call it primary distribution because it contains a volume point of control, that sort of makes a nice sort of box range. And where we came down is sort of right to that edge. And so we've talked about how, these low volume areas separate these distributions. And when you have sellers that are potentially trapped offsides in this lower distribution, price returns even close to it, oftentimes you will get covers, and then you'll also get, buyers that step in to render them still trapped. And so here, we're still coming back into that LVN again. Now, again, we've had some opportunity to escape yesterday if you were, truly stuck down here, but still reasonably constructive here. 19,340s. I think I'm using 307 to 340, something like that, into today. And you could potentially find rotational trades up here, maybe even into the upper 400s, looking at shorter frames, maybe, probably about 490. Seems reasonable. So looks terrible right now. Your first order of business is to find some kind of a reversal on the 30, take out a high of a prior 30, and see what bulls can do. So while I'm a perma bear, I came in looking at the bleed off. ES was sort of sitting at the spot. So to me, it's not busted yet until we see that opening action. That's kind of why I'm leaning at today.
Very different looking profiles. Very different looking profiles. Yeah. And ultimately, when I see that on the chart without looking at the profiles, when I see just different looks, doesn't give me really any confidence that we're going to get a clean move. It could be a lot of push and pull. I like to see the indexes working together, on my charts. To me, that's very important. When I see divergences or I see things to where the markets are not working together, that typically is a push and pull, especially for an S&P trader, over a NASDAQ. NASDAQ can almost do what it wants whenever it wants. It's the NASDAQ. But the S&P feels that from the other markets. So it's interesting to see that they look really that different on the profiles. I think that the clear thing is, going back to what we've been talking about a few times, a new low today, if you see that across the board, I don't care if there's tariffs later, it's hard to be holding longs. Sorry. Technically, macro, whatever you want to call it, not favorable to be sitting on a long position if we start to take out lows. Now, the only difference is if we were to splash the lows and come back into the range, then I could see him going all the way back up to the top of the range again. I mean, because that's what it is. You have to be careful, I think, about chasing momentum. It's going to be one of those things, if we do make a new low, you kind of wait for that little bit of a pullback to then accelerate lower, and just be good with your stops today, everybody. Make sure you have your trades planned out, because I think it's going to be a whippy one, Pharm. I really do.
Yeah, I think that's exactly right. Could be volatile. And, like you said, if we come down here and we just sweep yesterday's low and we reverse back into range, I would probably feel safer back above, 5730s or so. You're absolutely right. I mean, anytime you take out a prior day low and there's not continuation, you're very likely to see a cover response and a buying response, come in. So that, you now have both sides of the tape are doing the same thing, which is pressing the buy button. And so it doesn't mean it will happen, but it certainly can happen. And if that allows us to get back up into this range, for this distribution for the week, then we could come up here, and we've got like these relative equal highs up here now that just kind of, they're sitting there just like begging to get taken out. So I rule out nothing on a day like today. I do think it's going to be wild. No bias for me. It looked disgusting when I first woke up, but then just looking at the profiles, I say, yeah, okay. I mean, it's holding where it needs to hold for now. So to me, very neutral. We'll see the open and see how things go.
Yeah, well, we just got the big guy in studio. We'll be getting to him soon, too. And we also have a special guest in here. So it's about that time for you and I to wrap up. We're going to get ready for Tanya. Pharm, as usual, love your morning insight. it's super helpful for me as somebody who doesn't look at volume profile. You taking me into your world has been great. You know, it's funny, years and years ago I used to look at it, but every time I look at it with you every morning, it really helps lay out the day. So thank you, my brother, and everybody hit the like for Pharm. Make sure you like and subscribe to the YouTube channel. Chat's been blowing up this morning. Got a really jam-packed day. Thanks again, Pharm. We will see you tomorrow, my brother.
We'll see you tomorrow, Deli. Take care.
All right. Well, there she is. You're one day into your birthday. How was your birthday yesterday? I have no sound for Tanya.
I'm back. Yeah, I put myself on
There we
mute.
go.
Oh, it was
She's
great.
back.
Thanks for asking. Went to Spark Steakhouse. So it was great.
Cool. You got the glasses on again. I love that. You and I were talking
I
about
got
that a while ago, wearing
prescription.
the glasses.
Yeah, and I got them with my prescription
you?
now, so I like it better. Yeah, because before I was wearing contacts, and I was like, I want to get prescription ones. I don't like wearing contacts too often.
And I like sporting the colored shades. I mean, I have been using readers with the blue on them, and I'll tell you what,
Yeah.
it just helps me tremendously. I don't need them for here right now, and
Mm-hmm.
but I might have to start sporting them when you and I are on. Show everyone that I'm wearing the glasses too. But you know, busy day yesterday, Tanya. Great insight in the morning as usual. We'll go to your charts this morning as we get into this tariff day. What are you saying?
Right. So, like, I mean, beginning on the weekly, we're still above the weekly open, but like you said, it's not looking good right now. We retraced, all of yesterday's gains. On the daily, what I looked at, it feels very similar to last week, where last week was Wednesday high of the week as well. So this could be very similar. Like today's Wednesday, we took out yesterday's high, and now we're below yesterday's open on the daily. And it could be, this could start turning the week red. Like you said, today is Liberation Day, but it's at 4 p.m., like you said. So it could be a little bit of back and forth. But in my head, I'm bearish because of the fact where, who's going to be really, I'm thinking psychologically, like who's really buying, can't catch really much of a bid here. Who wants to be buying today? I don't know. Like we'll find out. And we've been dripping lower. So I like to go to the 4 hour. Like so far we're looking bearish. We're here on the 4 hour. We didn't take out this swing low yet, but once we do, looks like we retraced into this huge bearish leg from Friday, and now we're continuing lower. I'm not really going to go against the trend there. So I'll mark out these lows here. The swing low here on NASDAQ. Around like 261. And on ES around 5,600. I think we can get there today. I mean, yesterday, we have, especially on ES, I think if I was going for shorts today, I would be targeting this low. Especially there's like a little 4 hour fair value gap there. And you can probably see that even more cleaner on the hourly, but here we are. We're not too far from it now. I mean, like Pharm said, I don't really like shorting at the open when we're already lower. We're gapping down, right? But yeah, we could just continue and have a fast tape in the morning towards these lows. I wouldn't even be surprised because we already had our manipulation to the upside, and we retraced into this bearish FEG actually. Dropped lower. I mean, we're getting, just trying to see here. I'll move to the 15 minutes soon, but yeah, here on this hourly, we took out this swing low on the hourly. I don't see what's really stopping us from going for this low, like 5,600 on ES and NASDAQ. Yeah, 261, 19,261 around there. So I would probably just look at for any retracements to be shorting, really. Look at the open. I would honestly, we could just keep going because this looks like some momentum to the downside. But that's where I would be targeting for shorts. I think most of the chat is also bearish. Let me see. And yeah, I don't see what's stopping us for going for last week's low as well. It could be a fast day. Let me check again with the news. You said that it's like there's 10 a.m. news today? Yeah. Oh no,
Yeah, there was
there's
some 10 a.m. news today.
okay. They have yellow
Minimal.
folder. Okay. Trump is speaking at 4 p.m. The thing is also, it's an NFP week as well. I don't really love doing NFP weeks. It's always the first week of the month where my favorite week is always the third week. The first week of the month is like establishing the price action, establishing the manipulation, or like if it's the high of the candle for going lower, which it does certainly feel like we did retrace enough. Yeah, so we broke this low with an FEG. I would probably look for, I mean, it would be great at open if there's a retracement higher and then a failure and we can continue the trend lower. But we could also just start dropping, which would be a tougher tape if you're not if you're not a momentum trader. If you're waiting for a retracement, sometimes it just doesn't happen. Like I'm more of a retracement trader, and that's okay. Just know that what kind of tape it is. So let's see here on the 15. Yeah, it's not looking pretty here at all. It's high, and then this is the low. So this is a bearish breaker. Yeah, I would be looking at this leg here. This is a low of this the FEG
Okay.
that broke this low. Now we had that closure below it. What's up?
No, I was
Did
gonna
you
say
say
the poll 55%. Yeah, 55% bearish, 21%
oh
bullish, 23% neutral. Big difference than what we saw yesterday, right, Tanya?
yeah, yesterday was split right down the middle. Yeah, I wouldn't even be surprised here if we just come back into this area. It's in a discount area. If you're looking relative to this leg, it is on the lower end of it, but we're having some momentum here. I would be looking at that as a point of interest. And yeah, we're having a gap down, right, from yesterday. So it's look at whether we're going to fill. Yeah, I would look at it in the morning and we're going to rally a bit to fill in some of that gap and then to see if we're going to continue the trend lower. Yeah. So where's this 4 p.m. closes like here. So I mean we ended yesterday here. And wherever we're starting, we have we have a huge gap according to the RTH. So we could have some rally in the morning. I mean, I would actually welcome that. Yeah, and then take out some trend line liquidity. Like all of this, we've just been making lower highs, lower highs, lower highs. So if we have some sort of pushback wherever it is into this trend line liquidity and then go lower from there, I would target this. Yeah, that's what I would look for. Let's see.
Are you seeing any divergences between S&P and NASDAQ? You and I talk about that a lot in the morning when you're doing your preparation. I'm just curious, or are you seeing them working very similar today to where you would trade either one?
Yeah, to me, they look pretty similar. Let me see. I think they both took out yesterday's high. Yeah. So, right. Yeah, both of them took out yesterday's high there. Let's see on the 4-hour. Okay, they look pretty similar. Let me remove this. Yeah, this is the same. This is the same. Yeah, they look very similar. I think you're good with going with either one on shorting. Yeah, they both look quite bad this morning. And let's see. Yeah. I think NASDAQ was weaker yesterday. I can't even remember anymore. Doesn't even matter really because it's very, very similar. I think Tesla was, the strongest in the market yesterday. Like it went up like 4% or something. So I always like to look a little bit at those like the mega caps in NASDAQ to see if maybe if there is NVIDIA news and it's catching a bid this morning, then I'd rather short ES or something. But looking at these structures, they look pretty much exactly the same. We're coming back into about 50% of this wick right now on ES. I would like it if that constitutes a short-term bounce, and then we have a little bounce during open to have the manipulation, a little bit of a retracement to a lower later on. Yeah, it looks really similar to last week, honestly, because last week was Wednesday high of the week. And yeah, like we say, the trend is your friend until it's the end. So I'm not going to be
Yeah.
contrarian here too much. So what I see is just like some trend line liquidity. There's not really any like equal highs to go for the bulls or anything, where I think it's like a liquidity pool. Meanwhile, I see these like swing lows in the liquidity pool for ES, and I mean, this is yesterday's low, right? And then we could continue lower, depending how we react here. But especially it's Wednesday, so it's nearing the end of the week, and we could potentially take out last week's low. Let me look at the weekly again. Yeah, I mean, actually,
I
this
was
is
thinking that
we
for the
made
big
low on
picture.
Monday. I mean, Monday is low. Sorry. Yeah, we gapped down on Monday.
Yeah, Monday's
Yeah.
low.
Oh man, it really feels like it's been a while. So time is moving so fast. But yeah, we could take out Monday's low. It's totally possible, yeah. So especially Monday started out so weak, it made sense that we had a retracement and we could continue lower. Yeah, that's my thought process, especially if we take out yesterday's low. But that would be my first target, is yesterday's low here. You said Kane is in the studio now, right?
Yeah, Kane is in. He's in frame.
Morning, T-Dog. How are you?
Good morning. That's funny. My 5th grade basketball coach called me T-Dog. You're sitting at my desk now, my formal desk, my former desk.
It's your desk. It's Sarah's desk. It's my desk now. All right. Let's just get that clear. So I am sitting here. She actually left me a note to tell me that I need to respect the desk. So yeah,
respect the desk, dude.
Yeah, I kind of agree with you, right? Like I'm seeing ES trade a bit lower right now, but that previous day low is kind of, all eyes on that. I don't really like that we dropped so much overnight without any sort of retrace, but I mean, there's no secret. I'm pretty bearish, like mid to long term, and I just want to see a retrace into an area where I can look to get short and ride this thing probably into like new weekly lows over the week. I'm positioned via puts right now, so I'm not looking to chase it, but some sort of bounce at the open would be welcomed, and then up into those 525 levels, ES like 660s, and then lower. That's kind of what I'm looking at. But yeah, right now it's really not looking good for any sort of bulls. So yeah, it's a bit of a tough one coming into the open, to be honest.
Mm-hmm. Yeah, I agree. It could be just the fast open too. Sometimes we see that happening where there's not even a bounce. So gotta be ready for anything. I mean, it's a fun day for you to be in person. So good luck with that. Could be a fast day.
We had dinner last night, Yeah, we had dinner last night. We did do a little bit of wine. I blame Kane for me being a little bit foggy today. You know, I don't recover like I used to. It was not easy getting up this morning. And so we are ready for hopefully another announcement coming up here soon when somebody else is in studio. I don't know. Do we have somebody around here? I don't know. It's going to be interesting, Tanya.
Maybe.
So stay tuned. I know you have your stream, Tanya, but
Yeah.
there could be something going on here in a minute. But thank you again so much, Tanya. You're the best. We look forward to your sessions on Monday and every day on NinjaTrader, Monday through Thursday from 9 to 9:15. Tanya Army, hit that like button. Give her as much love as you can. Let's get these likes up. We've got big Kane in the house today as well. So Tanya, thank you again for being here. And Kane, what's up, man?
Not much, other than feeling a bit foggy.
Yeah,
just like
you're a
you,
little foggy, yeah.
Just a little bit, yeah.
Hair's looking good though, dude. I think that he blew dry it this morning. He's really making a run at the title, folks. This is what's happening now. He's got a little spray in there. I could tell. He's all got a blow dried back. I mean, what's happening here?
Yeah, I'm not trying to compete for the best hair. I think we know you take that. Don't worry.
Thank you.
Yeah.
You got to give me something, man. Please. You know, I need that. That's it. Be nice to a guy. No, but we had a great time last night. It was great to catch up with you. Tons of fun. Really just getting to know each other a little bit more. You know, it's funny. You meet people online, but then when you get a chance to have dinner with them, you break bread, you have good conversation, lots of talks about the industry, which it's an exciting time, really, to be honest with you. You know, and all the good things that you guys are doing with the lab. I was able to learn more about that. And if you haven't heard about what Kane is doing with the lab, go and check it out. It's absolutely phenomenal. Just really, really cool stuff. So go and check out their website, and excited to have you here with NinjaTrader. So, yeah, man.
Yeah, it's good.
How's it feel to be down here in Florida, coming from the cold UK?
Yeah, I arrived. The weather was pretty good, and then we got a flash flood, and I could swim in the garden. And we have a pool, but we didn't even need to use it because it flooded pretty bad. But then it cleared up quick, so it was quite shocking. And the weather's been good. And then tell you what though, like Miami to Naples is like two different worlds. It's
totally different, man.
Yeah, it's nice here though.
Yeah.
It's really nice. Yeah, it's like a slower pace of life, but it's nice. It's probably more aesthetic, more at least in my eyes. But yeah, it's treating me well. I'm only here till Friday, and then I leave Friday. I'm back in the UK for the weekend, and then probably jet out somewhere else shortly after until the summer hits the UK.
Yeah, I mean, that's what's interesting. I thought in our conversation last night, you're at this time where you are traveling the world, doing all of that, you know, and you're in your trading remote where all you go to these other places, you know, kind of living the dream. And I get that. I love that. You know, it's exciting to see, you know, a trader like you, you know, have a really good start to your career and now really taking advantage of it. Not just, we talked about this, not just being in the computer all day long. It's more like there's more to life than just that.
Yeah, I just, you know, I like turning up to the computer, being disciplined for the hours that I need to, and then after that, just put it away, you know?
Exactly.
Because I know, like I said to you last night, I know so many people that work 40, 50 years of their life to retire, and it's just like I have the privilege to just work a few hours a day and make good money and do anything else with my life. It's, you know, I like the market. I don't love it so much that I want to be in it all the time because then I'm going to hate the market, you know?
Exactly.
Yeah.
So, well, today we've got you for the next 2 hours. Let's see if we can get Kane's charts up here as we're getting ready for today's open. Going to be possibly a busy day. We never know, but I would assume it should be. I know you've had some kind of tough days coming in with news coming out, all these different things. You're here on a Wednesday with this 4 o'clock tariff thing hanging over your head. But I know you're patient and disciplined enough. You're only going to do the trade that comes to you. But what are you seeing so far this morning?
I'm really only interested in engaging with the market if it has a push at the open. Really, if it pushes lower, I'm probably just going to leave it. Like I said, I've got exposure to the market via puts, and I'm midterm bearish. You know, probably. I want to see probably that yearly low taken overall, and then, but I'm not trying to trace the intraday move just to fit my midterm bias, right? Like I've done that a few times and it gets me whacked. We caught a nice short yesterday, kind of got, you know, faked out of the open, caught it on that little retrace back into the open around what time was it? Around basically 1, 2-ish. Caught some of that retrace, and then we rallied into the close, which was violent. And then we kind of took that previous day high with, that market open at 6. I don't really like that too much. And then we've just kind of sloped off the entire day. It's like bulls really need to show that they're interested in price at this level. We're back down at yesterday's open. ES is below. It's kind of suggesting to me that if ES pushes back up into that opening price and they reject it, then it could just be lower. And all eyes are on that previous day low level, right? We get a good reaction off of that. We could see a bounce and then could play some sort of trade into the retrace, potentially before getting short. But yeah, it's tough. I could frame either side, and when that happens, I like to just wait, let the open do its thing, and if it runs, it will give me some sort of setup later on around that 10 o'clock hour. And yeah, just got to be patient with it, really. It's just probably the hardest bit of the game is everyone wants to see it run, and it might go without them, but it is just what it is sometimes. So, but that's pretty much the only way I'm going to get involved. Either we get a reaction off previous day low, I can play some sort of midpoint retrace, or we push up and we play a midpoint into previous day low.
Got it. Yeah, you like the midpoint a lot, and I'm just curious, why is that so significant?
I just see the markets typically retrace 50% of their move before continuing, right? And over the years, I've noticed that 50% premium discount, whatever you want to call it, it's just we take that level once those levels typically align with a gap or an area that I'm interested in from a price perspective, psychological level, previous day high, previous day low, whatever that is. It's just I'll simply look for that breakdown and trade that breakdown. And then I just trade it from midpoint to a midpoint, right? From midpoint on the way up, just grab that small piece of the move, and I'm kind of done. And if we accelerate through the midpoint, then I'll just trail. My invalidation then becomes I don't want to see it trade back into the midpoint, because if we do, then that's where I would have got out of the market the first time around. I left my money on the table, let it breathe. If we get a good trend day, then they're my big winners. And if we don't, then I make my money and I leave. So
yeah. That simplicity to me is so important, because whenever you get to those areas, you're always just hyper focused on one direction. I think that's the number one thing as to why you stay so patient every day, is when you come in, you say, let's wait for this setup, and then you get focused on that one direction, and then it's just about execution at that point.
Yeah, I mean, to copy Merritt's terminology yesterday, I like to take those small paper cuts in that area that I'm interested in. And if we rally through it, then I'm out. I just take the paper cuts for the day and I walk away. If not, then those paper cuts quickly, they get forgotten about once I'm in a winner, and I take my risk off the table and I let it breathe, because I like coming in with a daily plan. I'd probably say my best days are when I just react to what I see happening on the chart. But there's just no secret about it. I'm a pretty heavy short seller most of the time.
You love the bear. Well, I mean,
Yeah.
I think most of us that trade futures like it just because it's quicker, sharper moves. And I've said this before. I said, bear markets are some of the best years I've ever had. You guys didn't. I don't think you were trading in 2008.
No.
A little young maybe then, but that was such an interesting year. And I see a lot of people trying to compare this to then. There's nothing like it, but I think just bear markets in general. I mean, that's going to be my last question before I drop off and hand everything over to you. Do you feel that this year's tape has shifted just the way it's trading versus last year? Because you love to be bearish. So do you think that the tape has turned in? Do you think this is officially just a bear market?
Yeah, I do. Yeah, I just think that even if we just leave trading and charts aside, I'm a big people person in the fact that the average person I know in life is struggling. Companies in general are just taking a bit of a hit. I worked in tech for a number of years, and the last 6 months, tech has just been bleeding money. And they obviously a couple of months ago they announced some major job cuts. Tech is always the first one to pivot, and then it bleeds into everything else. So I think the next earnings season we'll probably see that bigger correction that we're probably looking for. Tesla's taking a big beating. It's the fourth largest short position in the stock market right now is on Tesla. The Trump campaign is obviously trying to drive interest rates down. It's just everything is trying to push price lower, whether they mean to or not. It's just having a heavy hit on the market, and bonds and yields are just ripping. And that's just the number one sign that that inversion curve happens. It's #1 recession indicator ever. It's just all those things happening, and it's just like, why would I just ignore that? And that was kind of the thing, watching that banks borrowing at a higher rate than they can lend. It's just like they're bleeding money, and if banks are losing money, everyone's losing money in my head. So it's just like, at that point, it's like I'm expecting the market to have some sort of correction so that we can factor in some sort of cuts. I don't even think the market's going to care about the cuts, and I think that's just how I feel. But we'll see, right? And it's just the cuts are a few times away. It'd be interesting to see the job data on Friday, to see how the market is actually, for the last couple of quarters. But yeah, I think we could get a really violent move to the downside if that jobs data is not solid, and I'd rather be positioned in that via puts, like I said, than not. Regrettably, I missed the big drop. Although having all of the analysis perfect, they're just so violent, so quick, I couldn't get into it.
Yeah.
So, yeah, and then when we look at if I bring up the 3-month chart, this is the thing that really gets me bearish, right? It's like if I just hide all my drawings, it's like this doesn't look great, and all I want to see is a 50% retrace of this leg up, which happens to align with yearly low, and that's just what I'm aiming for. I just want to see that January low taken from 24 around that 17.6 level. I'll start getting probably a bit more bearish around 18K, factor in some like divergence with ES potentially, but we've got a long way to go, and it's already a lot of pain, I feel. So I would welcome some sort of rally up, but if we impulse down with NFP on Friday, I could see us quickly trading into 18K, low 18K, and then we lose that 18 number, and it's yearly low from there on out. So that's kind of what I'm doing, right? I'm just trying to trade that. Same thing every time. I'm trying to trade that higher time frame candle. I'm just trying to position in the lower time frame wicks. So if we look at the 3 month, we then go to the monthly. It's like this push up. If this candle was for whatever reason to just sell down to here, everyone will be like, this was the wick for the monthly.
Yeah.
It's a 1.5% wick, on average, these up wicks, 1.5%, it's a pretty decent sized wick to put in, especially on the first 2 days of the month.
Yeah, early on with very important jobs data after the first quarter being pretty bad, Yeah. So why would we fade that? So it's just like, I kind of wanted to be positioned in that yesterday. Got a piece of the pie, got my puts in end of month. I'm just looking for that monthly extent, like rotation out back into the lows. Yeah, NinjaTrader doesn't have puts everybody yet, but we're getting them soon. Puts, options. 2 things I want to say real quick is, number one is it's interesting to me that you are looking at the bond market, because at the beginning of the quarter, that's what's so important to me. When you see bonds getting a lift and you're seeing gold and silver get a lift, we've talked about this with Tracy. It's flight to safety. You're actually seeing those hedges work right now, and why ignore that, right? I know as an index trader, a lot of people, they don't want to understand the bigger picture, but it does matter, right? Because if you look at your strategy and you see a bearish signal, to me, macro has never got me into trades, but it helps me hold trades. It goes back to like you holding puts. Like if I want to be directional, I like a little bit of something outside of just my market to help me, and the bond market and the gold and the silver market are signaling that. They're telling you they're buying them and selling us, and it's just what's happening.
Yeah, I mean, look, me and T spoke about it yesterday at dinner, but silver, there's not much more of a bullish chart than silver right now.
No,
and it lagged behind gold. Gold's ripping, and silver just looks like it's about to catch up. And when those two are just ripping and yields are just taking that monthly open spike, everyone is just fleeing to safety. They don't want to be risk on, and if they're risk off, indices is the first to take a hit.
Exactly. Are we going to hear from anybody else in studio today?
Maybe.
Your favorite Uber?
Oh, we're getting sounds in from other areas, aren't we? Yeah.
Yeah. We'll see.
Yeah, we will see. So, Kane, I'll be poking my head in and out today. I'll hand the keys over to you, as we do say here on NinjaTrader, all about the trader, and I'll be here watching. If you get bored, hit me up. Maybe I'll come back out and chat with you. Until then, I'm going to say the same thing I said to Merritt yesterday. I'm going to go pour myself an espresso, and I'm going to watch you through the glass.
Yeah, nice one.
Hi, everybody.
Appreciate you. Chat, how we doing? How's everyone on this fine Wednesday?
How's it going, everyone?
Can we hear him yet? So yeah, I'm just looking for this push up. Okay, nice one. Yeah, so I think, look, we're obviously seeing this push down into the open now. We've got a couple of seconds right until the open. I just want to see this spike back up, and then we can kind of look to play some sort of short. I'm not looking to play a long out of these areas right yet. I just want to kind of see that open play a bit higher. Logical liquidity target just means that low that is resting around that 50% move. So if we mark out the low to the high, this candle represents 50%. It's a significant level. It's that previous day low, and then we can push potentially higher. But yeah, I think the open it could be a bit saucy today. We'll see. What about you guys? Bearish, bullish? What do you want to see? Let me know. I'm intrigued. I want to see this hourly level traded into. We get up here, it's click the button time for me. So just bring him in. Stop yapping.
I'm in the studio.
Yeah.
I'm here.
You want to see T's face? I think we'd all like to see T's face. But yeah. You can hear him? It sounds a little low. Yeah, I think we're going to try and fix that. I think that's the thing we're working on right now. But yeah, for those of you that don't know, obviously T is in the studio with me today. We're just we're gonna get him mic'd up and get him talking through some price action with us. Yeah, we know it's too low. Don't worry about it. We're fixing it. I can potentially spoil it. You may or may not see him.
You may have to riot.
T, can you hear me?
Yeah, I can hear you.
I can't hear you. That's the
can't
problem.
hear me.
I don't know if they can hear you either.
Chat says they can hear me.
You can hear him? Okay, that's good. I just can't. You have to shout at me. You can hear him? Okay. Yeah, no worries. T, what are you looking at?
I mean, I was looking at RTY, but it already took previous day low right before the open.
The Russell. Yeah.
So if we frame a reversal off that.
Yeah, I don't really look at the Russell too much, nor YM. It's just an ES and NQ kind of market for me. I just think those two don't really do anything for me.
I rarely do. It was the weakest asset going in the morning.
Yeah. I just need to reload my chart, guys. What are my thoughts on order flow? I think it's good information to have. I don't know too much about it. Leo and the order flow labs guys are your people to speak to about that. But yeah, the volume is low at the open. We just rallied 50 points. I don't know if that is. I don't know if that's low volume. You need to beat my record. You're going to beat it. We know that, don't we? Come on. We know that. We know that that's going to happen. Yeah, this is kind of the move that I want to see. I want to see us push up and then potentially just look to take some shorts. I'm not interested in playing this this breakout to the upside. ES is kind of showing its strength. It's running into yesterday's open. NQ's above both. I just want to see us push up, take some of this resting liquidity. And then we can potentially look to play some shorts. Did we rebalance? No. Okay, so yeah, I just want to see us really take this high, right? And then we can just rest with that previous day low liquidity just sitting there. So this is shaping up to be a pretty good setup for me. I want to see us take this high into this inversion and then lower. ES and NQ is all one needs. Yeah. We took out that liquidity at 8. Yeah, it's nice. Played into that weekly open level. Don't know what we did on a weekly open. Yeah, we got a bit lower to come on ES. So we'll see. Please say numbers when you say hi. You could just read it, honestly. I don't really talk in numbers, so you took that weekly open long. Yeah, I can imagine you did. Spike below, take the hourly low, and then just rip. Yeah, it's a pretty good setup, especially with the open and everyone trading the opening range breakout. It's good. I will look to fade it though if we get up into that area. Yeah. T's low again. I don't know if he's speaking.
No, I haven't said much.
No, I didn't think so.
RTY reversed pretty hard off previous day low.
Yeah, they're all reversing pretty hard out here. I just want to fade this. 19,500s is that area for shorts for me. Yeah, this area, 512, 513, 520s. I can imagine this is going to take a lot of volume to get up here. Around that area is the hourly gap, yeah. I thought the draw would be Asia high because Asia low was taken. Jeez, this is a big move straight out. There's a lot of volume coming in here. Like to just rally this much straight off the open. It's heavy. Is that a dragon? Yeah, I think it's people just covering shorts and getting long. I don't know. We'll see. I just want that. Like I said, I want that 500s level, and then I'll take it. I'll look to play that. JCap, you need to chill out, my boy. Take those Apex accounts and just run them up. T, you missed a silver long. Did you?
I'm not taking that with failure swings off the lows like that.
No.
No.
This is planning out to be perfect, to be honest. We left that resting liquidity at previous day low. We're hitting that area now that I'm interested in shorts. And now I just need to see this stall a little bit, maybe impulse higher and then trade back lower. We inverted. Yeah, I'm really not interested in this right now. You've also got 20 minutes for it to play out. This has already played off, back up into discount, seeing some sort of rejection around these levels. And yeah, we will push a little bit higher and we can get short up in here or not. We'll see. Yeah, I don't really use VWAP. Like I said, I'm not a volume-based trader, so it doesn't really add too much confluence for me. It's tough to see this just rally this high and then drop 30 points straight away. I want to see it rally a bit higher so we can potentially self-stop into it. Look, guys, I don't know what the market's going to do. I just have a plan, right? This is my plan. I just want to see that. I want to see us trade into this area so I can look to sell this back down, even if it's just into an area like this. I'm bullish till we get Asia highs. Yeah, fair enough. We all have a plan, right? Nah, look, JCap's been killing it, boys and girls. He's someone asked, would this be respecting PDEQ?
I mean, it disrespected it. That's why I was looking for previous day low. But then that's why I went to RTY, because that's the weakest asset. It's right at it now on ES.
It's kind of crazy we're rejecting that level very hard. A lot of volume got us there, almost to the tick, you know.
Yeah, 47.25 ES. It's the level.
I just want to see this impulse higher so we can trade it lower. That's it now. I just need to see that impulse. This move's great, but now I just need to see that big extension and then a pullback, and then we can potentially reverse that back into this area. And if we really start to pick up volume to the downside, we can just trail and just watch it run. Previous day low would be nice, and we'll see. T doesn't believe in macros, but what if it reverses at 950? If it reverses at 950, then we probably wouldn't take it because we'd just be waiting for 10. Yes, Nick, how are you? We just wait for that 910, right? Because 10 o'clock is a new 4-hour candle. Typically, it brings a lot of volume. If your stop's above a high, which mine typically always is, my stop loss suddenly becomes my target. You know, I want to see that high ran and then some sort of pullback into discount, that midpoint. So, yeah. I believe in the 4-hour open, you know, and that's where I want to be positioned, in that 4-hour wick. I don't want to be positioned in a trade to get ran out in that 4-hour wick. We'll see. We'll see what's going on. Tesla down 4%, NQ ripping. Is that real? Yeah, it dropped, like heavy drop. It's down 2% now. It dropped 4%. Nice recovery though with the open. What's the keys doing? Yeah, we're above my puts. Sad times. That's good though. It's everything I want to see today so far. T should get Tyler on the T Talks. Maybe. Not to put you on the spot, what do you think about T-Trade's fractal model? Yeah, I think it's really good. His model is one of the models that I also trade. So yeah, I mean, it's a good point. We took that 6 a.m. high, ES failing to do it. That gap that everyone's talking about is now looking pretty bearish. I don't like naked just shorting this, especially when it's a 250 tick stop. So yeah, this is tough, right? Because literally everything we wanted to see, and it may just run. When I say naked, I mean just without a stop above this high, because if for me to just short here and like have an invalidation up here, what's my invalidation above? It's just more liquidity, and I just want to see some of that liquidity taken. So my stop loss becomes like, it's not a real invalidation. It's just me trying to catch the knife here, and that's what I refer to when I mean naked. Obviously, I have a stop loss, but it's just, if we go up here, my bias doesn't change, you know, because I just want to see that impulse to then trade that lower in and around this area. So that's the hard point. No, I don't really like having my stop loss at midnight, because I feel like midnight acts as a draw on liquidity quite a lot of the time, especially when you have like a resting low, such as this like 4 o'clock high, sorry. So that you have that hourly high resting around midnight, midnight was respected, and then a big sell-off. I don't want to see us, if we come back up into that area, it would just be that level that I also want to short. So if I have my stop loss there, then it doesn't invalidate my short idea. You know, I think that's a lot of people make that mistake. They're wanting to play a short idea, and then they get short here, validation here, and actually the short is probably more like this. You know, play that stop loss. I'm not interested in Asia high. It's such a wild move, and if we recover all of that, then I'm just off the market. I'm not interested. VBOC, I don't know what that means. A volume point of control, maybe. I don't use it, but I understand that some of you might. If they don't run this higher, we go back to take the lows. That's typically how the market works. Yeah. I don't really care how we get here. My idea for shorts remains the same. Yeah. And I'm not looking, like I said, I'm not looking to catch that knife. I just want to see that impulse. Where obviously that new 15-minute candle just sends us higher. And now I can just frame this 15-minute high and then that 15-minute wick. And then I can potentially look to trade that lower, right? We'll see. So many over complex acronyms. Yeah. VPOC. I don't know. Everyone's got an acronym for something, right? It's just easier. I'm going to short silver so bad. I think a lot of people have said that about gold as well. It's really hard to get risk on betting on them going down, right? Do you see the RTH? Are we going to fill it? Maybe. Do you see me with an RTH chart? Yeah. There you go. Look, that midnight level would have just got hit. So we just, trend day. Maybe. We'll see. Talk about volume. Yeah, you don't have anything on stream. I can see that volume is stepping into the market when we're up 300 points in 15 minutes. It took us 9 hours overnight to get to the lows. Moves to the downside are typically quicker. And then when we rally 300 points at the open, I just know the volume's there. I don't need to measure that. I can add a volume profile if you lot care about that, but it would just... Oh. Why don't I pay attention to volume? It doesn't really add any confluences to my model. I just look for that push up into that area, and then I look to trade that breakdown. Oh. Need to... Yeah, so look, I just want to see this impulse continue. Invalidation is that midnight tap, that high, framing this 15-minute candle to just sell down, this become the 15-minute wick after taking all this liquidity. If we're wrong, we're wrong, but this is typically how I get positioned into trades. The market's not going to sell today. Yeah. The market wasn't going to buy after we were 2% down yesterday, but it did. Do you know what I mean? There's absolutely no guarantee in trading. So I just have to stick to what or gets me paid consistently, and let it play out. Any thoughts? Yeah, I want to see this sell down into the 4-hour candle and then get some sort of push, get risk off. And if we play that 4-hour candle, that sweep of that high, that's perfect. How are you trusting? Built a model. I understand that when this happens, statistically, it plays out more often than not. And yeah, if it doesn't, it doesn't. It's not really something I care too much about, because over time it will play out, you know. So we just take those paper cuts. What's my model based on? It's trading from 50% to 50%. So like we're in this area taking some highs, and then I want to look to see a pullback into 50% of this area before either continuing or not. You know, that's basically what I look for. We got ran out. NQ took the high. ES failing. ES either needs to catch up or not. We'll see. 10 a.m. news. I think the news is very light today at 10 a.m., isn't it? Let's have a look. Yeah, factory orders. I really don't care about it. Nothing really changes here, other than that 5 minute took that high. ES failing. That 15 minute still took it. We have... Yeah, all I'm seeing is NQ is currently stronger than ES, and ES is looking like it wants to pull back, so... Nine minutes till 10 a.m. now, so I probably wouldn't look to grab something here, and I would just play that 10 a.m. above 9 a.m. and then back lower, back to that 50%. That's sounds so simple, but that's pretty much all I trade every day. I love the hair. Appreciate you. Yeah. Do I trade mechanically? Yes and no. The model is mechanical, but obviously there's intuition and discretion that goes into which trades you take. That's it, really. But my intuition is part of my edge, right? I don't want to take every single trade. Is that vodka? No. This is the premium water, the morning routine of gods, you know? It's the Ashton Hall water. I think it has a name, but it's just called Saratoga, right? Where's the bananas? Probably controversial, but I hate bananas. This drifting sideways price action, I kind of love. I just want to see that 10 a.m. now. Yeah. So pretty much every day, what I want to see is 9 a.m. make a high, 10 a.m. print, push lower, take the high, and then break down. And either the higher we go, I can trade either back to the open, or I can trade to 50% of the range that formed here, right? And then I can trade. My trade will be trading some sort of inversion up here, framing this area as the wick, and then trading it into 50%. That's it. Yeah, I sit on the M1 before 10. After 10, it's like M3, M5. Because sometimes we just get that pullback before going higher with 10, and I like to catch that. But, you know, now's going for 19,800s. I mean, that's quite a move, but yeah, maybe. Maybe, just maybe. Yeah, I trade. Yeah, I mean, I've quite openly said a lot of times I just trade 4-hour PO3, but not everybody understands that terminology, so I just explained it. Like everyone else would understand it. But yeah, I'm more or less just trading that 4-hour PO3 every day. Do I believe in algo while trading? Do I believe there are algorithms in the market? Yeah, I do. Yeah, I'm bearish for the quarterly and monthly candle. Four-hour wick looking mad. We'll see. I mean, this 4-hour wick's crazy. Pull back up. Do I ever trade YM? No. Do I ever go to there's no IFEGs on the M3. Do you go to a lower time frame? Yeah. Again, it depends. I don't like to just like no context go to the lower time frame. I'd always look to frame. If it's something like on an M15 takes that wick, creates that swing point inside of that 4-hour wick, then I'll always look to trade it, right? So yeah. Now you're saying opposite me. This is where they accidentally, on purpose, put the camera on.
Let's not do that.
Let's not do that.
Yeah.
No, they wouldn't. Can you teach your intuition? No, you can't teach intuition. It's like, can you? It's like, can you have my brain? No, you can't. You know, we're getting a face reveal. I don't know. We'd need to get probably a lot more viewers than that. T's mic's low. Yeah, he was just moving desk, so it's nothing. Yeah, it's a tough spot, right? If the 4-hour closes green, which it currently is, would I look to frame this as a swing point with this expanding? Sure, potentially. We hit this count of the range, so it makes sense. We didn't take a decent liquidity low that I want to see. Well, I don't know why I just picked the 8-hour. That's a bit random. Yeah, either we just trade up into these 500s levels, trade above midnight with that 4 a.m., the 4-hour, and then yeah. But if not, then I will. I mean, I'm only ever going to trade the breakdown with confirmation. I'm not just, and if this thing just rips, then it just rips. But yeah, I hate YM. I think YM is it's awful to trade. I understand that people like to trade it when it trades an expansive move, but that doesn't suit my style. And also the amount of times I've seen YM up 1% on the day and NQ down 1%. It's like, yeah, they just can't even be correlated,
It's generally doing the opposite of what NQ is doing, and then ES just hangs in the middle.
Yeah, exactly. So we'll see. We've got 10 a.m. in 2 minutes, and that's kind of that's the candle I like to trade the most, right? So am I in a sell? No. Oof, when T's voice hits. He's not that quiet at my end, to be honest. Maybe I'm just loud. Just a shy guy.
Yeah.
Yeah.
I'll face reveal when I get a haircut.
Yeah. Which is never. Yeah. I will enter again, yeah. I mean, not right now. I'm just waiting for 10 a.m. now. We want to see that 10 a.m. print in the next minute. 100%. NFP always has, everyone's anticipating NFP to do something. So when they're waiting for that, the market's just either volatile, ranges, it's the extremities. It's not ever expansive in one direction. At least most of the time. There have been weeks where obviously it just expands, then NFP just retraces the whole move. Yeah. No, I strictly just trade NQ. The Mr. T Trades is at the Ninja office as well. Yeah, we're both here.
I'm in Deli's seat now, taking over.
Yeah, he's the new boss. I'll take a photo of
I'm
him.
the captain now.
Here we go, look. There you go.
When I face reveal, that will come out.
Yeah. You guys get to see that in the future. We'll see. Anyway, it really depends. I mean, typically 2 to 3 trades a day. I'm not one of these people. I like to grab expansive moves, right? Like I know that some people take 4, 5, 6 trades and they take 3 paper cuts and take 2 big trades. Yeah, I don't need to grab a lot of trades, right? So now we're just simply framing 10 a.m. to take this high. Expansive move, the better. Some sort of inversion up here. Click the button, trade it back into the open or 50% of the range, whichever is first. That's kind of the thing. Are the markets bullish? Well, we just ripped 300 more, I think now. Just under 300 points from the lows. The fact that we took out last week's low first thing this morning and accepted back into the range. No, doesn't really bother me, because if I look at the monthly candle, we didn't take last month low, and I'm just framing that this is just a wick for the monthly candle to sell down into these lows. And if I'm wrong, I'm wrong. Like, that's just part of trading, right? But that thinking has made me significant money in the market.
At least $5.
You made $5?
You did.
That's crazy. Dinner's on you tonight. Do you think low time frame market structure holds much weight? It's fractal, right? You don't never see a 4-hour candle sell down without making some sort of structure on a lower time frame. So my puts are priced for 0, so don't worry about my puts. Could get that bear market rally. We're not even above previous day high, and everyone's talking about it like it's ripped. You know, we're up 70% on the day. The emotional side of trading, eh? I only want to trade options around the quarterly open. Didn't do it at the start of the year, but yeah. Then we get that quarterly open. I'm just framing that quarter to sell down and sell it for end of month. And if we take a loss, then we just resell quarterly puts, because that's my plan. And then if we can roll a winner, that'd be good. You know, that's kind of the plan. NQ above its quarterly pivot. Yeah, it was below it earlier. We'll see. I don't know. I don't want to see this level hold. I want to see it sell down within this 4-hour, and I'll put my money on it doing that, right? That's just the game. Yeah, I trade reversals, but then this is just a continuation, right? Is this a reversal trade or a continuation trade? You tell me. They held point of control and continuation to the upside. Set in for 650, but didn't get the drop after 10. We'll see. We will see. I have traded the 2 p.m. candle more so recently. Yeah. But not, I mean, the setup has to be super, super clean, right? Exactly, Merritt. That is the whole point, right? It just purely depends on your view. If I trade this here, is it a pullback or is it a rally? If I trade this here, is this the continuation trade or is this a reversal? It really is just depends on what you're trading and where you're trading it, right? When you trade on stream, do you feel pressure to click the button? No. I mean, look, I've gone through periods where I haven't taken a trade for a couple of days, and I've sat in front of 400 people talking about nothing all day because the market's just not doing anything. That is just part of the game, right? Is that a good use of my time? Probably not, but it's just the name of the game. We use that time to just educate, ask questions, answer questions. The close back above daily open and it's bullish. Yeah. Yeah, I don't really want to talk about my options position right now. It's not really, yeah. Would T share a screen? No.
I think it's set up that way.
Yeah, it's not set up.
It's kind of last minute thing.
Sticking to your model is so underlooked. Yeah. What indicator for SMT? It's private. Sorry. My 2 cents after last week's close. No reason to be long. Yeah, I mean, I think. Yeah. Strong bearish divergence on RSI. Selling from value area high. Yeah, these. I understand that everyone uses all this stuff. I don't really use it, so I can't really add much value to the conversation. Can I explain my model? I look to take. Yeah. Okay. I will explain it if you don't spam me with the question, and then I will. But I just simply trade. Once we're at 50% of a midpoint of a range, I then look to then trade it back to 50% of the leg that got it there. That's it. Should I repeat that 4 times? Bro needs the model. Yeah. I don't know. Yeah. We'll see. This is nice, right? Inversion above that 9 a.m. high. We sell down, get acceptance. This 9 a.m. candle, this 10 a.m. candle should sell at least to the open, which is here. Yeah. I need 4 thank yous. I'm just going to change this. Whoops. So this trade now would look something like this. How do you determine the range? I posted a 2-minute and 44-second video on Twitter about it last week before. And yeah, you could just go watch that. See, this trade, that is not very nice. So this RR is pretty horrible. How do I know it's 2 minutes and 44 seconds? Because I've been asked for the same question 100 times. So I think that people typically do it wrong. That 15-minute candle, trading above the high. It's also that hourly candle, also that 4-hour candle. So now we just need to wait for this 3-minute to invert, and then we just click the button, and that would kind of be the thing that I would do. Do I drink my beer warm? Hot take, I don't drink beer. I need to wait for this closure. Dalton. I haven't really looked at Bitcoin. We can look at Bitcoin once I get this trade, potentially, at least.
You have the SMT on London high and Asia. Or not Asia high, just London.
Oh, yeah, these. Yeah. We'll see. What are your thoughts about today's PAT?
For me, it made too big of a wick to trade at the downside, but
Yeah. Yeah, that feedback is horrific.
When New York reverses, my targets are always session highs. So
Yeah. Oh, that is horrible to listen to. Yeah, the hard part about this trade now for me is that this sell's still valid, but my break-even point is usually that 10 a.m. Yeah, nah, you know me. Anyone inside the lab knows me. I typically explain things once, and if you miss it, you miss it. But it's just, that's a lot better. That was blowing my ears out. Yeah, we obviously get people join at different intervals, and we just get repeat questions. But it's okay. It is what it is. This stop loss is so big. I don't like it. That's one thing I don't like. We may just absolutely sell down here. But yeah, if we do, we do. It's just the game, the name of the game. And if we play up and play into here, I don't know if I'd want along. That's the harsh reality of that. I'll catch the riskiest shorts, but the longs, I do have a big problem in catching those retracement longs. Already 100 points from the top. Yeah, I know. It's almost like it did what I said it would. I just don't get an entry. Look for shorts from that area. My Twitter is _Trader Kane. Every Wednesday. 9:15. Yeah. Let's see. Let's just humor me. Was there a 1 minute we could have taken? No. Yeah, but no. Never going to take that. Never going to take that one. So this would be my sell, and also it probably lines up to 50% of this. Yeah. Nothing really changes. Saratoga making the rounds. I just asked for water, typically glassed, bottled water. And this was what was given to me. Shorted almost to the tick. Yeah, I mean, I can't catch knives like that without any sort of, confluence, volume profile, etc., which, like I've said many a time, I don't really use too much. I've looked into it, and I reached out to Leo. Leo was very, very helpful in adding some confluences to the order flow stuff. So, if order flow is your thing, Leo and the Order Flow Labs guys are the people to speak to. I'm not really the person to speak to about that. Picks bottoms, gets smelly fingers. Yeah, I mean, if you're sized correctly, it doesn't really matter. If you're sized to a point that it is what it is. The model formed on the M1, yeah. But again, I mean, you would have to take it all the way up here, and nothing stops this just really buying back. I need to see that 3 minute, 5 minute displacement. That 5 minute. I really like this setup. I just don't know if we get the entry. It may just sell back down. You're waiting for the 5 minute CSD.
you're talking about gold.
No, they're waiting for the gold. No, they're talking about gold.
Yeah.
Yeah, I purposefully don't even pay for the data on any other product than NQ and ES, so that I just can't even look at it.
Just take it like 15 minutes. Just hope and pray.
You just tell me, yeah? You're just like, yeah, it's the level that we should play. How many trades on average? It depends, really. It truly, truly depends. Some weeks I can just be on a tear and know that I'm on the right side of the market, and I'm just okay with just playing that edge. Sometimes I can be off the on the wrong side of the market and risk off, right? That 6 a.m. H4 candle makes me doubt shorts. I mean, I'm just sticking to my model, right? Ultimately, we should at least retrace into 50% of the move. And if we want to play higher, then we play higher. You imagine you won't see T-Trades taking a trade? No, because he's here with me. Yeah, he came for the trip, so I'm here every Wednesday. Maybe, just maybe, we can get T on another time. We'll see. Tariffs released later in the session. Yeah, I think that's a smart move from them, right? They're probably wanting to do it out of session so it can have the most impact on the market open. That's probably my bet. Or it has the least amount of impact on the market. I don't know. We'll see. I don't know really the reasoning as to why they moved it to 4 a.m. And that's probably 4 p.m. Sorry, and that's probably the reason I'm not the president of the United States. You know. Best country I've ever visited. I think it's a hard thing to say. If you were to ask me the most beautiful country, it would be Cape Town. That's South Africa, Cape Town. But it's I more or less only take entries on NQ. In fact, I've never shorted or long DS in my life. Kane come to Dubai. Yeah. I'm going to Dubai in a couple of weeks, actually. Maybe like a month, or actually the end of the month. We'll see. I've got to get out of Florida first. Ever been to Australia? I've never really been to many places in Asia. So, come on, just get a little tap into this. ES is pulling higher. I just want to see that tap and a quick retrace. That trip is why you trade. I've never been to Thailand. We are not Asia. So what's Australia in? APAC? Pacific? Yeah, when I say Asia, I just mean APAC, really. Asian Pacific, yeah. Yeah. Australia is part of APAC, so... Yeah, I mean, guys, we're talking about the same thing, we just have different terminologies for it. Yeah. Cape Town is beautiful, right? Like it's a very scenic place. It's left those equal highs at the top. I don't know. This doesn't look very equal high to me. NQ ran all of this liquidity. 10 a.m. opens. I get to trade it. I get to trade inside of the wick that potentially will form with this being 10 a.m. open. When this candle sells down, or if it sells down, it will just look like this, right? Right now, at least, I'm just four framing. It would just look like that. And that's kind of what I'm looking at. And I want to be positioned in that wick once we take that high, once we have that breakdown. They're all the confluences of me trying to be positioned inside that wick, and if I'm wrong, I'm wrong. You know? And there are days I'm wrong, there are days I'm right. Yeah, I'm short right now. I'm short 3 from 59.25. Do you know Tom Camp? I was with him a few months back and he kind of mentioned he knew you. I have no idea who that guy is, but I probably know him by a different name, potentially. I don't know. Oh, the TikTok guy. Are we talking about that guy? He was on the Bright Find It podcast not so long ago. That guy? That Tom? We want to see 100 lot, Kane. If you give me the risk composition capital, I'll do it, Jacob. Deal? Yeah, I'm kind of downsized right now, waiting for that 4 or 5 month mark to hit, and then once that hits, I can look to size back up. Yeah, I mean, if I get stopped out, it makes absolutely zero difference to me, I would say. What we really want to see is 1,000 cons. Yeah, I'm not that level. That's something crazy. What's the margin requirement on that at that level? A couple of mil? Probably more. I think it's more, actually. I don't know if there's any broker out there that's going to leverage your money. 1,000 contracts at that point. Is the FEG valid at 947? 947? 947. Oh, you're on the 1 minute. 947. Oh, that one? Yeah, but we kind of already took a stab. We already tried that and we got stopped on the run up, right? And then we just wait for 10 a.m. to form that wick that we want to see, that formation of that wick, and then I want to just trade again, fractally, right? 50%, trading 50%. That inversion rests around 50% of this move. So 50% to 50%. Yeah, and then we can obviously add things like confluences like this. We completely close back inside of it. So if we do start to trade lower, the target right then would just be below the daily session because the amount of it took to push up here. If we want to see that, then that deviation, that push to that side, it's like, but ultimately I don't really need that. I just need this move to somewhere around here, and then it would just risk off, right? So that's 10 a.m. So now we just need to see an acceptance back below 10. So this 4 hour candle then looks to sell down, and then it can make new lows, and then we can go from there, right? That sells down, makes new lows, does all of that. There's not any reason really that candle should then flip back bearish. We can then trail. We can get our invalidation. Honestly, if you have enough to put 1,000, then you should just own a seat. You don't really require a broker anymore. Yeah, me and Daddy were talking about that last night. You can just buy a seat, yeah. Axia Elite Trader. Yeah, I'm okay. How much Gamma? I don't use that. Why don't you use VWAP? Because I'm not a volume trader. I think the term of the name of that kind of gives that away, I think. If the trade hits stop loss. Yeah, I mean that's crazy. What broker did I use for NinjaTrader? I've used a bunch. I think the one that most people probably remember is AMP. What do I use to trail my stop loss? So for me, the logic is the 10 a.m. candle. Once the 10 a.m. candle sells down, And then once that sells down, I look to get risk off. At this point, it would probably just be a break of that hourly low, and then I would be break even, and then I would expect that to run into here at least, which roughly is around discount. Then I would just let it breathe or not. It's looking extremely bullish though. What prop firm do I use? I don't really use. Well, I don't know really about that. I currently don't have any prop firm accounts. Could you trade the 4-hour candle without bias? Yeah, I just imagine you would get a lot more losers, to be honest. The whole bias of it and the 50% is like the part of that I... Could you just trade inversions in a 4-hour candle? Sure. But then there comes a point when you're not really framing that 4-hour wick anymore. And you're just trading every inversion or every gap inside of that 4-hour candle. And yeah. Did Top Step and My Final Futures ban you? No, officially. There you go. They added 1K contract sell order at 615. Thing is now is if we sell back to the open, I just don't want to see us go back into this high. ES made a higher high. I know, this indicator tells me that. Yeah, why aren't you trading at other props? Okay, so let's just dispel this, right? Everyone just assumes that I hit Apex and that was the only one. Top Step paid me out close to 100,000. And My Final Futures, I hit the payout cap and got moved to live. And then I closed my live. Like, okay, I've never had any Traderify accounts or any others, but like, everyone just seems to always think that I just hit Apex and kind of ran away with it. Yeah, I did hit Apex for a lot of money, but I also hit the others for a lot of money. And those that have followed my content for a long time will remember that. No, I don't trade prop. Let me ask you guys a question, right? Why would you trade prop? What's the reason for you to do it? Like, outside of legacy props, ignore legacy props. Like the actual like brick and mortar props. Guys are out here doing good things. Why would you use those guys? They're going to help you. They're going to coach you. They're going to do everything. But like, why are you going to use the retail prop firms like Apex, Top Step, those guys that aren't, capital, 2,000 extra money, build a real account, accumulating accounts and capital. So that's just for argument's sake. It's just hypothetically, you get paid you make $500,000 from these accounts. Yeah, that's a lot of money, right? This is obviously an extortionate amount of money. What are you going to do with it? Are you going to just stop trading and move on? Or are you going to just chase the prop game and manage risk or do any of these things? Or are you just going to deposit an amount of money that you're comfortable with and then trade that on a real account? On a live account. Not trading in sim. Reinvest it into other businesses. Yeah, I just rolled it, You're getting stomped out. Maybe. The last person that told me I was getting stomped out on the stream ended up making a bit of a fool of themselves. But we'll see. Order flow says you're getting stopped out. Yeah, I mean it's quite literally the way I trade. I trade reversals. I take those paper cuts. The SMT indicator is private. You can't get it. Sorry. Oh, it's fine. It is what it is. Dude, this was a big mistake. Oh my god. You guys are going crazy with it today. How many of you are in trades right now benefiting from me getting stopped out? Everyone, I'm assuming. GXT's winning. I've been done since that delivery into London. Yeah.
Hey, Kane.
Hey, Shy, how are you?
Good. Just wanted to come by and drop crude numbers. Crude, we had plus 6.165 million. Fishing was 2.273 million. Gasoline inventories minus 1.551 million. And distillates 264K. And those are the numbers.
Sweet. That makes no difference to me.
All right, have a good day, guys.
Yeah, no, it's fine. Yeah, those crude numbers don't do anything for me really, ever, every Wednesday. But yeah, look, guys, I know that a lot of you think that this is bad, but I can guarantee you lot would take a losing model that makes money consistently over a period of time. And that's just the sucker of the game, is that people can see, you know, that a losing trade in a model, and if you catch that loser, the model sucks. That's fine. But coming off of a back of winners or a back of losers, and then you catch the winner, that's great. It's a holistic view, right? And I think a lot of people just come in so short-minded to see you don't win 100% of the time. And let me tell you, if someone tells you that they're winning 100% of the time, they're lying. They're just straight up lying to you. And that is just the reality of it, you know? They'll chase, and that's it. ES is ripping. I know. It's criminal that I don't have 100% win rate. I'd be a trillionaire, probably. Maybe even more. We could do $1 into $1 trillion with 100% win rate. How many trades is that?
Then you'd be the king of inversions.
I would be the king. Oh, well, right now I'm definitely not the king. I got stopped, so. Yeah. Can we get Kane a cigar? I don't really smoke cigars. Yeah. I mean, what? We lost how much today? 2, 5, 5, 6, 6-ish. Made 30 yesterday,
Yeah.
25 the day before. It's hard, eh? It's just, it is what it is.
You only have 50 now.
Yeah.
You're broke.
That's tough. Anyway. Yeah. Yeah, nothing really, the sad part is nothing really changes here, right? We either expand or we don't, and if we don't, then we play that pullback. It just really, all it did was just move this a little bit more into this. So it's, yeah. Honestly, for those that are defending me, I do this so often, and I'm so used to the people hating. And everybody that's hating on me here, that's just top longed for 280 ticks. You are much better at this than me. On a genuine level, I cannot top long markets. It's just not in me. I wish I could. I wish I could trade breakouts. I wish I could do all those things. I genuinely can't do it. It's more mentally exhausting for me, and I would just rather sit in drawdown for 60% of my trade and then get stopped or not than sit ever so slightly in profit and then round trip it. That's just the way I am. I don't really care about the size of stop loss though. My invalidation is my invalidation. If you wanna, let's just say this, right? Say you want to short here, and you want your stop loss here, or you want your stop loss below 30 points, right? And you do this, but your actual invalidation is above this high, and then we just go and do this. You just enter the same trade with the same stop loss, and then it does this. And then you take all these paper cuts for no reason when actually your invalidation is this. You know, so yeah. I'm not really like a praying for news kind of person. You're going short. Trades in play, I'm holding. Yeah, I mean, it's just, you just get ran out, right? ES just does the same thing. Everything is still framing. NQ is still in that area. We either need to push, like really push and take out the high, or yeah, everything just needs to pull back. ES corrected that SMT, that inversion. Bro, stop watching my pockets. The 25k account is doing pretty well. Don't worry about it. I could tell you it's up $53 million, but that would be a lie. I could also tell you the real number, but it doesn't really matter what it's up. What do you mean when you say fixed psychology outside of trading? I just think psychology books in general are better for psychology than reading a psychology, like a trading psychology book, because I don't think trading psychology is truly real. But that's just my opinion, right? Someone will have that view. I think there are things that can be related to trading psychology that just make psychology better, right? Like when I was having conversations with Jared on the first NinjaTrader stream, which was really good, right? Is I could see some of the conversations he was asking me, I could apply to my personal life, right? So it's that for me. It's more the discipline in trading is one thing, but having discipline just across your life is completely another thing. And that's where I would say the real edge is, you know. Yeah, Pete, I don't ever trade Asia. And I only ever really trade London around that 3 to 4 hour. Like, that's pretty much it. But it's been really bad recently. I know, like, even we review this price action, right? 3 to 4, 3, 4. It's just very range bound. Then you get the expansive move into late London. Yeah, that's kind of it, right? Started trading 3 times a week because of you, and it's great. Yeah, you just want to trade less. Why did I leave big tech to become a trader? I was getting paid good money, and obviously I was making good money from trading, and it got to that point where I could work less and get paid about the same. And then, yeah, it's just better work-life balance for me at that point. It's funny. I get stopped, but everyone's like, oh, it's going to 650, it's going to 640. We're now back at entry. So it's just, you know, I imagine everybody that was long here playing that breakout that didn't take profit because you didn't, and that's just the reality of it. Aiming for that huge breakout to the upside, that previous day high, that rally, that 600-point face-melting rally is now emotionally stuck in their trade, you know, because that's just the reality of it. Yeah, you sent it higher. That 20 cons, 20 accounts, 400 contracts in sim. That's heavy. No, I'm kidding. You know I am. Yeah, I mean, look, I caveated. JCap's not a hater. Me and JCap are friends. Chill out. He's just joking. Oh my God, guys, chill. Advice when you're on a losing streak. It's just part of the game. You have to go through those. No one sits there and goes, "Oh, I need some advice. I've had 20 winning days in a row. I just can't deal with it. I'm dying from success." You have to take the good with the bad, right? And if you get into trading, you're going to go through that losing streak, and it's needed. Actually, you need to grind your teeth down in the market. You have to, right? Yeah, very emotional chat today. Don't advise. It's not only framed during 10, but it's most profitable at 10. Like it is what it is. How often do I have a losing streak? February was pretty rough for me. I think I had like 3 good break-even trades that ended up running. So in my head, regardless, they're kind of losers for me. And then I had like 3 losses as well. So yeah, it was tough. It was a really, really tough day. February. You're probably one of the few people I'm following. Appreciate you, mate. The trade's not invalidated, right? And that's the reality of this, is that we just get ran out of that high. The truth of the matter is I don't really like the price action. Like, price is being heavily bought up from this area now. What should have ended up being selling, buyers are just stepping in here. And if you just, I like to do this quite a lot, is if you just mark out this wick, price is just getting bought out of this area non-stop, right? Let's just make this a green, just so everyone can see it. Price is just getting bought out of this area. And that kind of doesn't really make much sense to me to then get short above this, because I'm expecting these buyers to get run over. And yeah. Average trades a week, 5, 6, roughly. Can you describe T-Trade's model in 3 words? Hourly macro. Hourly macro reversion.
Yeah, that's for sure it.
Can't read today. Up 80. Yeah, fair play. If you made money, you made money. You beat 99% of the people today, right? Crazy how calm I am. I think the reality is, guys, is that I've done this for a long time, and I just know that some days I'm going to lose and some days I'm going to win. And I don't get really emotional on the winning days, and I don't get really emotional on the losing days.
Gonna backtest my model on TradeZilla. They're building an indicator for me, so I'll let you know when that's out for the platform.
Appreciate you, Pax. I'm just drinking Saratoga water. That's pretty much it. I do think we probably reverse from here. I'm probably just not gonna keep the bias. But do I think the news is dovish or hawkish? I just think the tariff news is probably generally sucky for the general consumer. Do I think that what impact it will have on the market? I don't think we've had tariff news other than all tariff news so far has sent the market down, right? It hasn't sent it up. The only thing that sent it up is if he's removing the tariff. So for me, I can only assume that tariff news is going to be bad. Maybe retrace into breakers at 674. What book would you recommend? It depends what I think you need. The psychology aspects that you need to work on. I don't necessarily think there's a book that can just answer everything. There are some very good trading books that will help you with some sort of small trading psychology. I don't want to say secrets, but little tips and tricks. But I think a lot of people really struggle with ego, right? Like wanting to be right more than successful. I don't know. I can't remember ever telling anybody there was SMT on this trade. Max, I don't know why. How come you ended up picking the 3 minute as opposed to the more conventional 1, 2, 5? I don't use 1, 2, or 5, or the 1 or the 2 really. I used the 1 before. After 10, I use 3, 5. If the 4 a.m. 4 hour opens on 30-minute change of state delivery, that's aimed at you, not me. Do you want to answer that?
Yeah, let me read it. I mean, I don't trade the reversal. So like I'm not entering right at that open generally. I'm going to wait for a continuation, so a new swing point to form. So then I'll be waiting for a continuation entry. That's basically it.
Listen, there are some very good traders on the show and just in general on the internet that would tell you, I could give you a trade, I could give you the guarantee that it's going to play out, and I could let you risk as much as you want or you don't, but like you're still going to lose, like in that, because the emotional aspect of that comes into it, right? You will emotionally look to either scale out or scale in, and you can just absolutely ruin your trade, right? If someone can tell you buy gold, but if you buy gold every day and your entry starts to suck, eventually it's just not going to be a great position, right? If you buy gold at the low and sell at the high, you're amazing. But if you buy it in the middle and you get caught in a retrace, you probably emotionally are like, it's going to zero. Okay, it's a game of a fine balancing act of everything, right? You need to really try to be as unemotional about it as possible, but that's hard because you're putting hard-earned money on the line every day or as many days as you want to trade, and that's hard to watch. You just watch that money leave. Yeah, it's not easy to just go, oh, that's okay, I'll make it back tomorrow, and then when you don't, you get into a bit of a rut. But you just have to really soldier through that rut, and that is just hard. It's just hard. There's no secret to just doing that. My aha moment when everything clicked. Just becoming as not emotionally attached to the money, downsizing risk, and then scaling that risk up after, like finding your edge. And that's the reality: is if you can't take a loser, you just really are over risked, And that's why, for me, it's just like the risk is the risk. I don't know what Jake Cap's model is, so no, I can't explain it. We don't need SMT. It doesn't need to have SMT. I'm just playing 4-hour period 3 here, not TLM. I mean, they're very similar, but I'm just playing that 4-hour period 3, which is that 10 a.m. opens, closes lower, drives higher, trades lower, and I just want to see it trade back up down into these lows, right? If you're scared to take a trade, it's purely because you're over risked. If you were risking $1 on the trade and you don't care on the direction of it playing out because it's up or down, and you're risking $1, it's not about the money then, it's about the outcome, right? I mean, it's just drifting sideways. This is normally pretty good for shorts, but there's just a fine balancing act of where you need to find that amount of where it impacts you, but not enough to the point that you're going to start making emotional decisions about your trade. That's it. It's more outside of trading. It's the result of lacking of discipline. What's the book called? It says You versus the Mountain. The Mountain is You. That's a good book. I read that. I got gifted that book, actually. The Mountain is You. That's about self-sabotage, discipline, getting out of your own way. Yeah, there's not really much to add here. I'm going to be honest, guys. This is kind of the point in the session where I would just close up shop and walk away from it. The name of the book is Mountain Is You, by Brianna West. Mountain Is You. I'll tell you what I need to do though. I need to put my battery. The Mountain Is Me. No, The Mountain Is You. It's the name of the book. Don't Walk Away. 640 is coming. Yeah, I don't really care about that. Ezekiel, I have no idea. I'm not JCap. I can't answer questions about his model or what he does or doesn't sell. And I think you know that. I don't think anybody can really negate the full emotional side of trading. That's just it, right? Because it's a game of emotions. It's made to beat you.
And everyone has different emotions.
One doesn't talk about the chart. That's crazy. Because all I did was talk about the chart for quite a while. But it's got to the point in the market where this is just grinding upwards, and I don't really want to get into that. Automate trades. Nah. I think my edge is part of my discretion. Oh, sorry, other way around. My discretion is part of my edge. Wicks do the damage, bodies tell the story. Look, boys and girls, it is just what it is. Would I re-enter? No. Yeah, I really don't advise that from what Colin just said. It sounds crazy. Until, what time do you look for reverse? I mean, till 11, really. What do I think look, guys, it's NFP week. They're waiting for probably a bigger move on Friday, and also tariff news or Liberation Day, whatever you want to call it. That is getting released on at 4:00 today, or all the news. So yeah, maybe just maybe I was early and I was right. That's the worst kind of day, you know. Early and right is just as bad as being wrong. Just joined a journal. I do journal, yeah. But I only journal my losers. I journaled everything to start with, right? My winners, my losers. Yeah. Early and right and paper cuts make for a bad emotional day. Not really. If you can take those small little paper cuts, getting into that move, it's not a problem. You know, I think Friday I took a loss and then I called the winner. Monday I took a loss, then I called the winner, and yesterday I took that break even, then called a winner. That was it. Like all of those losses were paper cuts in the grand scheme of things. Yeah. What about measuring 50% of the daily range? I just measure 50% of what I look for. Can I explain why I ended the short without the SMT? Because I'm framing that 4-hour wick at 10 a.m. I've used very few indicators. The indicators that I have on screen right now are just the opening range, an SMT indicator, the agent range, and the stat map. The levels that are marked up here. Marking out my weekly open, midnight, the levels that I want to see traded into for the day. And that's it really. I don't know when the reversal's coming. It may not happen. We may just grind higher and tariffs just send the market to the lows. May grind higher and tariffs send the market to the highs. I don't know. If I had a crystal ball and could predict what would happen, again, I'd be a trillionaire. I honestly couldn't tell you what we will or won't do. All I know is I don't like this price action. How do I discipline myself to not take another trade? Well, in about, I don't know, 5-10 minutes, I'm going to put my laptop down, I'm going to close it, I'm going to put it in my bag, and I'm going to forget about it for the rest of the day. And I'm going to just do anything else than look at the chart. That's it, honestly. Yeah. What did I study? Fancy a pint. Gosh. You just have to simply wait. You've just got to know when to fold them, like they said. And for me, I can just accept that my edge is not in play right now, and that's okay. Huge Bible added. Gosh. It's crazy. If you hit a killer gate, do you ever call it a week? Yeah. I mean, for sure, I've called it weeks. I called it a month in January on like the 20th of Jan, and was like, see you in Feb. I just kind of walked away from it. Kane's patience decreasing dramatically. No, my patience isn't. I'm done, guys. Like, I'm just answering questions. I think the Trading View clone thing was an April Fool's. No, did anyone figure that out? If it is.
Kane.
Jim, how are you?
Pretty good. Now that you're a trillionaire, your next level is quadrillionaire.
I'm actually taking a step down from being a quadrillionaire because I took a loss. I bet a significant portion of my net worth on this being a winner, and we lost several $1 trillion on it. Yeah.
Oh man, that's brutal. That's brutal. No, good job today. I know it's yeah. I mean, it's the best part about your explanations on things were great today, and everything. It's a long time to be looking for a setup and getting in there. So you did great, man.
Yeah, look, it's the name of the game, Jim. Like everyone will sit here and tell me every reason why I'm wrong. But the time that I'm right, they're just nowhere to be seen. And it's these days it just made me laugh more than anything else.
Yeah, no, and I particularly liked your wisdom. It's so important. I've been doing this longer than you, as you could tell by my receding hairline. That whenever anybody talks about 100% win rates and all of this stuff, that's a flag on the field, man. And you are absolutely right. They are lying and leading you down the wrong path.
Yeah, 100%. I always say the thing, right, is if someone's telling you they're 100% win rate, the only thing they're doing is making money off of you because they're lying in the market. So it's just, it is what it is. But, everyone will sit here and tell me that NQ was going to rally into the highs. Well, I get it because ES is rallying into the highs and NQ is just stalling. It's like you're telling me things I know what's going to happen, but my whole model is anticipating them not to, so.
Yeah, right on. Well, thanks again. Looking forward to having you back here, Kane. And I'm going to shoot into some midday markets right now and do some updates.
Appreciate you, Jim. Good luck.
All right. We are back. Midday markets. Let's take a peek at what's happening. You could speak, Jim. Let's start with the E-mini S&P. Hopefully, you guys can see how I shaded my charts. This is a 30-minute candle chart. And I highlighted the gap report area that Edgeful puts out, right? And I just kind of want to reiterate: we go to the regular trading hour close, previous session, and we kind of measure that distance all the way down to where we opened at the New York Stock Exchange bell rings, regular trading hours, and we kind of ignore everything in between. We ignore all these candles in between, and as you can see, that gap was filled. That was clearly filled, and then some. Tracking the stats was today for a Wednesday and a 6-month look back. 40% of the time it was filled. 60% of the time it was not filled. Sorry, I didn't put the not there. So this was kind of a good move up. The opening range breakout by weekday, right? And it's based on a 30-minute candle. And let me just get rid of the gap here just so we could see it. Is a 57.17% single break and 20.83% double break. Well, we see this is the opening range now. This is not the initial balance. I did this report based on that first 30 minutes instead of the first 60 minutes. And you can see that's, the top of it is right there, right? That's 56.61, give or take a couple of ticks. And not only did we break out, we closed above that high of the opening range. And not only that, we closed above the high, my white line there, of the initial balance, the first 60 minutes. So this was pretty powerful. This is surprising to me, but this was a pretty powerful move up on the E-mini S&P. We'll take a look at some gamma levels in a second. I did add that VWAP though, inspired yesterday. I added the volume weighted average price from this, and I'm tracking it from the whole session, not from the opening range. Later on in the day, I'll kind of pivot it over from the open forward, but right now I'm tracking the whole day. So that's what you're going to see. This purple line here, that's the VWAP. The first blue line up there, that's the first standard deviation. The second VWAP is the second standard deviation band on the top side. And interestingly enough, though, just let's keep this peak here for a second. We have previous sessions highs, approximately, I think it is actually exactly 56.95 even, and previous sessions lows of 56 even. And so that's kind of the range we're trading in. Yeah, we started off the session wicking up to previous sessions highs, but we didn't close above it. And now we're driving back up again, potentially creating a double top. We'll see. But right now the range is less than yesterday so far. And we're right between those two lines in anticipation of maybe 4 o'clock. I don't know. Let's just toggle over really quickly and take a look at some gamma levels as well. JAX1 is pretty far south here. It's 56.25. We're, I don't know, 55, 57 handles higher than that. So it's kind of a nice move up. But sorry about that. Just looking at some notifications here. But we're kind of sticky up here. I mean, Jack 2, we crushed it, 56.75, crushed it. We're 8 handles above it. I wouldn't call it a crush, but I did. Top of the value area, top of the value area. Again, we're trading above that as well. This is the volume profile associated with the session. I'll anchor it later on this afternoon to take a peek at and see if there's any differences with respect to the regular trading hours going forward. Point of control in the session so far, 56.64. And if you remember yesterday, let's see if I could do this without causing too much grief. Yesterday's point of control actually ended up at 56.73. Today, only 8 handles lower. And so this is kind of a sweet spot to think. If you think about, hey, maybe we're kind of a little bit anticipatory between now and 4 p.m., Liberation Day, then this is kind of a really nice area where there's a lot of price happiness. And if you just kind of think of it as a range, then that could also be a target at some point for shorts. Not saying we're going to get there, but it does act like a magnet sometimes. This kind of, when the point of controls are really close day after day, in anticipation of some kind of news event or something that's going to happen. So I thought that was kind of interesting from that point of view. The other area that I thought was really kind of is definitely worth talking about was the bottom of was Menthor Q's 1-day min, right? And they have a formula to say, all right, here's what we expect the 1-day minimum to be, and it was perfect, almost perfectly tagged it. Doesn't always, it's now, it doesn't always perfectly tag it, but it was pretty on point today. 56.10 3/4. And, 1, 2, 3, 4 candles literally danced, walked along the bottom there. And then buyers came back in. We did not break through to the downside. And at the time, let's just look at the RSI at the time. At the time, RSI was knocking on that 30 level. Didn't break it though, and then boom, off to the races. So interesting and surprising in my mind, rally in the E-mini S&P. Shooting over to the micro NASI, let's do the same exercise. We'll go back to the gap report here a little and take a peek here. We filled the gap. There's my gap. There's my rectangle. That's in the rearview mirror. Systematically, this is looking very similar to the E-mini S&P chart. We're touching against previous session's highs. We're right there. Couldn't close above it right now, but we're still trying. And previous session's lows are pretty far down here as well, framing the bottom of the conversation. So the value area here is, it's not the greatest, but a couple of points of control to consider. 19,578, and then again at 19,596. And the value area, we're trading above the value area right now. I don't know if we're going to be trading there for long or not, but this will be an interesting kind of launching pad if we have a continuation rally going higher and higher. But my guess is it's going to be a little bit anticipatory again. Now, yesterday's volume profiles, it looks a little different. The point of control is a little bit lower relative to the point of control today, as compared to the E-mini S&P, if that makes sense. And this volume profile is kind of rectangular, right? It's not really, it's not bell-shaped curve. It's kind of rectangular. So it's a little bit off. But right now, this is price happiness right now, 19,577. So that's, and then we have some initial balance breakout. So initial balance breakout, it's already happened. Single break is at 83.33%. This initial, now I did the initial balance, not opening range here. The white lines, that first hour, we closed above the top of the initial balance. And I set the report that way on purpose. You could generate the same report and either say, hey, I want to know from a wick point of view, if we're going to go ahead and have a breakout, or from a closed body of a candle point of view, if we're going to have a breakout. So again, you could use both of those pieces of information to come up with, at least kind of help frame your bias a little bit. Double break, not very likely here at 4.17%. And we're talking, down here where my cursor is. This is the session lows. This is the session lows. Just kind of looking at the gamma levels as well from Menthor Q. Let me open this up. Look at the bottom of the chart. 1-day min. We hit it again. I mean, it was perfect. 1-day min. We hit it again. Again, it's not always perfect. I want to let everybody know that. Yeah, we'd have a tweezer bottom down there, right? Kind of a nice tweezer bottom, they would call it, where those little wicks are, you know, the exact same, and then a turner, and then a huge rally that we saw in the mini S&P. The JAX 4 level, we're flirting with it right now. Previous sessions highs, interestingly enough, we traded above that last night right off the bat when the whistle blew, and then kind of sold off ever since then. Now we're all the way back up here. So this is again another area of interest when I see that previous sessions highs being tested. Are we going to break on through or not? On the upside, we have all sorts of targets on the upside. We have the 0 DTE call resistance level and the 0 DTE gamma wall at 19,700. We have R1, that's part of the pivot numbers, at 19,740. And then way up here, even we have JAX 1 at 19,800. We talked about that earlier this morning. So there are targets on the upside as well. The $1 million question is, how much does the market want to get ahead of itself before 4 o'clock? And I don't know the answer to that, of course, but we'll keep our eye on that. All right, let's keep rolling though. Let's go to the Treasury complex. This is, again, you guys know it's one of my favorite markets to look at. I think it can give us some clues as to what's going to happen going forward here. And I want to do the daily first. Move that over a little bit. So today, another day above our area of long-term resistance. That's my rectangle right up there. We're trading above that 111 and a half level, which is the JAX 1 level. And this is the second day in a row where so far the bodies of the candle have been above that area of resistance. So now it's become area support. So resistance becomes support, vice versa. And then the lower part of that conversation is this long-term area support down here. So we got support number 2, really, if you think about it that way. Support 1, support 2 on the downside. And again, I think this market's anticipating a little bit better than some of the other markets with respect to what's going to happen to interest rates. Where the 10-year yield right now is trading at, let's see, where's it at? 4.163. We'll take a look at that 10-year chart in a second. So we're below that 4.2 number, which is kind of a big deal for the 10-year notes. The 30-year bonds are pretty much unchanged so far, right? They're down a tick, but that's pretty much unchanged. Let's just go to a 30-minute candle right now. Nice point of control at 27 so far. Pretty big histogram bar. You can see I have my volume profile set tick for tick, and so there's not a lot of range here in the 10-year note today. There's not a lot of range here. Or maybe I don't have it set tick for tick. My bad. No, I have it set as 4 ticks because it's set for the E-mini S&P, and I'm linking my charts to my market analyzer, so it's just pulling over that data. So my bad there. But still, that area is kind of a sweet spot right now. I'll just put my cursor right in the middle, 111 and 27 halves as the official area of interest for me. The JAX 1 level, interestingly enough, at 111 and a half or 111, 16, 30 seconds, that was, all night long, we just kind of traded right there. And you could see that overnight action, baby candles, no range, no movement, no momentum, no anything. And then we started breaking out around Frankfurt, Germany time. And then, boom, off to the races. And now this retracement, let's measure this retracement back down because this is going to be interesting. Probably about 50%. But I'm just eyeballing it right now. Let's be official. Retracement right there. Wow, I was off, wasn't I? So we retraced past the 38.1, past the 50, past the 61.8. We closed below the 61.8. That's usually a warning sign that maybe there's a trend reversal here. And now we're kind of driving back up to that 50% as well. So this is looking less bullish to me all of a sudden now that I have done that. The pivot right now is actually, from a regular trading hours point of view, is really holding nice support right there. And that price point is 111.21. So that's the story of the 10-year note. We'll keep an eye on that. I just do want to pull up that 10-year yield really quickly here because a lot of folks just kind of look at yield because they're used to watching the television. And here's the CME Group micro yield contract. Again, I have a target wick. I have it circled down here, right? And a lot of I love to circle these target wicks because oftentimes we achieve these target wicks that are extreme, right? They're at the lows or at the highs, and you'll see that wick dangling wick, right? These are icicle wicks. We call these icicle wicks that are at the bottom of the candles. And literally, we tagged it today. I mean, we tagged it today. Any further south than that, you're tracking less than a 4.1 10-year, which would be a big deal. And then the next step down, of course, is that 4.00 level. If treasuries keep rising, and if it looks like the administration's goal of lowering that 10-year treasury note rate is going to happen. It's going to be a phenomenon. So that's the story of interest rates pretty much today. The U.S. dollar, it was weaker against everything earlier this morning. And you can see now it's weak. It's weaker against most things. Remember, in futures trading, you have the U.S. dollar is in the denominator of the currency pair. The foreign currency is in the numerator, the top. And over the counter forex, some of these currency pairs are different. So remember that when you're looking at my quote board or the market analyzer. And so right now the dollar is stronger against the yen, and the dollar is stronger against the Mexican peso for some reason. I think President Sheinbaum just said something to the effect that we're not going to go we're not going to go, 1-to-1, tick for tack on in a tariff war. And actually, I could probably tell you exactly what she said. Maybe not. Let me just scroll real quick. No, I lost it. But anyway, so that might have something to do with this move in the Mexican peso. I don't know. It's got 26,000 contracts traded. That's not a bad contract. It's not a bad contract. The biggest one is going to be the euro at 122,000. The second biggest is always the yen at 112,000. Those are kind of, good markets. And also look at the micro. Don't remember, there's micro contracts on currency pairs. Now, some of them are not really liquid, to be honest with you. But if you look at the euro FX in a micro, there's about 20,000 traded so far. That's not too bad. So in any event, currencies in play also the Canadian dollar. Remember, they're going to be affected by whatever happens at 4 o'clock. In addition to, well, probably all of these currency pairs are going to be affected. But the surprise one was the Canadian dollar. Let's keep rolling here. We're going to in hot commodities, we're going to be talking about some interesting markets. So I don't want to go into too many details on it, but we're going to skip over crude oil because we had that EIA number come out that Shai is going to come and talk about and provide some color on that. But pretty much we're at a 71 handle in crude, 71.17, down unchanged pretty much based on previous sessions close. And then you can kind of go down the line here and see what the differences are. Heating oils, it's up to at about 0.09%. Gasoline, again, is on its tear up. We talked about this yesterday, and this is just this is our Bob gasoline. I don't know if any of you guys are trading these or not. Chris, thank you. I appreciate you, man. Nice trend channel up. All the moving averages are up. We're miles away from VWAP if I added a VWAP on here, if I anchored the VWAP from this low. And it's just, we broke through my rectangle up here. So this is looking pretty bullish. As a matter of fact, we're trading toward the top end of the channel as well. So we're not even trading toward the bottom end of the channel. So this is looking pretty bullish also. RBOB gasoline. It's not a bad market to consider. It's not a bad market to consider when you're trading. But again, it's a specialty market and you need to kind of pay attention. Let's take a look at silver. Silver is an interesting pattern here. Let me move my extensions out of the way a little bit because they're kind of in the way. Let me move them out. And this is a daily candle on the silver. It's May silver contract. And, the interesting thing to me are these series of lower highs right now. And I'm just going to go ahead and draw a really loosely fitting trend line there just to kind of frame the conversation a little bit. And, I'll draw another trend line. Again, I'm using the wicks. Some people like to use the bodies of the candle. I'm using the wicks. And I'm just going to kind of frame those loosely fitting trend line again there. And of course, my triangle is not perfect, but so possible breakout in one way or the other here. We have an inside bar today. In other words, the high of the day is less than the high yesterday, and the low of the day is higher than the low yesterday. That's an inside bar. Now, some people just look at the bodies of the candle. Some people look at the wicks. In either case, we have an inside bar here in silver as well. Maybe not too surprising. I am encouraged, though, that it's a green candle. And if we end up with more of an equal and opposite type, in other words, we kind of rally a little bit higher here in silver, that could be a pretty bullish peak. That 8 EMA also is in play 4 out of the 5 last sessions. We touched it once on the 27th and then gapped away from it, wick through it again on the 31st, traded in through it again on the yesterday, and then today we also traded through it as well. So that 8 EMA is not, until we get some price separation away from that 8 EMA, I'm still on high alert here. From an extension point of view, we hit all our extensions, right? We hit all our fib extensions. We hit that 61.8. Next one up is the 100%, which is pretty close to that $36 range. We still got to get through that $35 range, which is going to be a, I don't know, psychological level or something like that. On an intraday, at all sorts of targets all over the place. Volume distribution on the session is not very good. The value area is at the top of the distribution. We have a pretty big break in volume just underneath, just once you get into prices below value. Remember, the darker colored histogram bars are prices below value on the bottom of a volume profile. And then the darker color on the top, the way I have it shaded, are prices above value. I don't know who came up with that. I mean, it's not very clever, but the value area is clever. It's right in the middle. It's those orange ninja colors. And again, it's kind of rectangular, right? We have a point of control approximately 34, 53 half. We have a competing point of control, though, and this is a really good way to look at it, approximately 34.76. Again, my volume profile, since I'm linked to the market analyzer, it's going to pick up the same settings as I have for the E-mini S&P, and I believe the histogram bars are set at 4 ticks for each histogram bar, but they're pretty close, right? 1754 versus 1780. So again, there's no kind of like magnet in my mind that says, all right, there's a dominant point of control, there's a dominant price happiness. It's just not there. From an options point of view, I should say a Mentor Q stat point of view, the JAX one is way down here. We never even got close. 34 spot 25. The 1-day max is way up here, 34.92. Again, never really got close. So again, we're within that range. Previous sessions highs are even further up, and where's previous sessions lows? Are even further down. So today's range is a lot smaller than yesterday, we talked about it. It's an inside bar, and you can see that kind of graphically really well when you plot previous sessions highs and lows on today's chart. So that's the story with silver. My guess is at 4 o'clock this is going to move. And by the way, I do want to mention, and I'll mention it again. Remember, Globex goes another hour. It's 4 to 5 o'clock East Coast time, supposedly during this press conference or however they're going to make these announcements. So be careful, because these things are going to move, and you might or you might not, but you might have less institutional participation. So meaning it might be extremely volatile. So you got to be careful if you're looking to enter a position between 4 and 5 this afternoon. All right, let's take a look at some other stock index futures, though we never really talk about as much as we used to. Let's go to the Dow, and let me just pop up a daily chart to start. This is the Dow futures, the $5 Dow. Each tick is worth $5. Remember, there's a micro Dow as well that's worth 50 cents a tick. Remember that. Hey, Thomas Bolatow, good to see you, man. Thanks for being here. Long time viewer, Thomas. So daily candle again, we're right 1, 2, 3, 4, 5 days. We've been trading through that 8 EMA. That's that orange line I have on there. We have a little bit of price separation between price now and the next EMA, which is the 21 EMA. It's trying to drive up there right now. Now, one encouraging thing is yesterday's wick at the bottom of the candle and today's wick at the bottom of the candle are relatively large compared to the rest of the candle. That's telling me buyers are coming in down here. Buyers are finding value, down around 41,800 all the way up and pushing us up before they get to equilibrium. In other words, sellers are get more and more involved as we got up here. But so those last 2 days were kind of interesting from a daily candle point of view. We'll see if in fact we continue up or not. Of course, anything's going to happen later on today, as we know. But this is looking good. No wick at the top of the candle today. We're trading at the highs. And not only that, we are approaching previous session's highs. And that's that green dot line there, approximately 417. So we might trade through it before my sentence is over right now. And it may or may not act as resistance, but that's an area of interest for me. And beyond that, we have more. We have more. We have R1, which is part of the daily pivot. Remember, here's the daily pivot, the yellow line in the middle. And then R1 is the, resistance one, it's called, at approximately 42,500. That, again, is an area of interest. It's a target for me. If I was bullish right now and I was getting long on a breakout or some other strategy, then I'd be like, all right, this is a target for me. Alternatively, I would be thinking, all right, well, if I want to get short right now, then maybe this is where my stops are. That kind of thing. But in any event, this is strong today. This is pretty strong today. Let's just look at the range for today so far. I'm going to pull out my ruler and I'm going to go low to high. I know we're at the highs right now, but it'll be dynamic. But is that right? 567 points. And the ATR on a 14-day look back is 665 points. So that's a big move. And remember, each point here, there's no fractions. Each point here is worth $5 per contract on the classic mini Dow, and then 50 cents on the micro mini Dow. And so you could do the math, what the dollar value is from high to low, and it's not small. It's not little, right? There's a lot of potential here. There's a lot of risk here. So keep that in mind when you're looking at stock index futures for your favorite setup. There's plenty of volume here, 67,000 traded so far in the July contract, which is pretty good volume. So some of these other stock index futures, they march to a different drummer. There's only 30 blue chips, as they call it. It's similar to the Euro Stock 50. That's also kind of a blue chip index, that I would call it. And it's, you could have price movement based on just a couple of the big components in the Dow. So keep that in mind too. It's not always systematic price behavior when you're comparing the Dow to the stock index future. That's 500 components, the E-mini S&P, right? So you could see some definite differences in performance one way or the other because of that, the non-systematic part of that drives the index, the value of the index. All right, let's go to the Russell 2000 really quickly here. The mighty Russell, small cap stock, doesn't do well with high interest rates. More smaller companies are more sensitive to borrowing costs, less capex, all that kind of stuff. But this is a pretty nice move up right now. Just looking at this movement on a percent basis, we're up 0.86%, right? That's almost twice as much as everything else. So this is the winner chicken dinner of the stock index future sweepstakes. We have the the Russell 2000. Hang on, let's just check the DAX. No, the DAX is down. Euro stock is down. Wow, they were way up before. In any event, big move up. We hit that 0 DTE and call resistance level at 2040 and a 0 DTE wall, a gamma wall as well. Previous session's highs, we're still flirting with it. We wick through it. But we're not closing above it yet. We'll see what happens in the next candle. Again, these previous session's highs are pretty important. Jax 1 right now, 2025. The volume profile, and I'll be honest with you, the volume profile for the Russell isn't really textbook when you look at it from a session point of view. Over the course of many days, it does get a little wonky. There's probably way less volume overnight in the Russell as well. So, official point of control is down here at 18, competing point of control at 24, and then a volume deficit here. Now another volume node is starting to accumulate at the top here. Another volume notice. So right now on my personal radar screen would be the top of that value area, 2036 half. That would be let's see what kind of retracement that would be. Let's move this over a little bit more. Bear with me. Fib line, where's my fib line? There we go. I'm going to go low to high. This is where the trend started, right? Bottom of the initial balance all the way to the high. Now I know we're making new highs, so we're going to have to keep adjusting it. But to get a retracement back down to the top of the value area isn't very far. It's a pretty close distance. I mean, the textbook 38.1 would get us back into that initial balance range. Not quite. Well, it'll actually get us back into the opening range also. That red little line there, that's the top of the opening range, that first 30 minutes. So that's what we're looking at for the Russell 2000 as our fourth stock index future. And there's a lot of chatter on the micro NASDAQ. Let's take a peek real quick just to see if anything's changed since we were talking about it. And now just bouncing off that call, that 0 DTE level, right? The call resistance level and the gamma wall right there, just bouncing off it. Isn't trying to stretch for that R1. I'm using a 30-minute candle. I know you guys like to use a smaller time frame. Kaz is saying, hey, looks like NQ is heading to the 840 area. 840 area. Let's get that on the screen here. I'm assuming you mean 19840. If not, Kaz, type it in. But that's where my crosshairs is right now. We'd have a lot of milestones to conquer before we get there. R1, Jax 3, blind spot 1, Jax 1. That's going to take a lot of love. Yeah. Firman's is putting rocket emojis to the moon, right? Uh-oh. Kaza said yes. So I don't know. That'll take a lot of love to get there, but maybe. I think we're in anticipatory mode here. This actual session volume profile is pretty good. Again, I love this point of control right here around, you could even round it up to 600 if you want, which is right where that high vol level is as well. And I don't know if much is going to change if I anchor let's try to anchor. I'm going to go to an anchored volume profile really fast here on the NASI. Where is it at? Here it is. Order flow volume profile from the drawing tool menu. I'm going to click on it, and I'm going to start it when we opened, and I'm going to end it there. So, it's real similar to the session volume profile. And you can see there, the point of control is about the same, right? It's pretty close. It's pretty close to that 19,600 level. So in my mind, this is my opinion, of course. If we don't break on through to R1 all the way up to Jax 1, then again, this could act like a magnet. This point of control later on in the day in anticipation for possibly what's going to happen. 20 says 2020. It took me a second to figure that out. 2020 says anticipating a 500-point drop. Well, that does get us down to 200, right? Wow, that's off the screen. That's on my keyboard, 2020. The 19,200 What did you say? You said 500 point drop. That 19,200 is off my keyboard. Let's try to put it back on. So S2 is way down here as well. That's another area of interest. Again, that's pretty extreme as well. On a day when we're kind of waiting for news. We're waiting for the big news event to come on up. Pharm says Tesla's up 2.5%. And you to the Mars. To Mars, Jim. Okay. We have an Elon fan. We have an Elon fan in the stands today. In any event, we'll see how it goes. I'm looking at this volume profile going forward here. I'm adding it again based on the opening range and just kind of looking at where price happiness is. We have a little volume node generating up here, but we're going into lunch hour, and you heard Tom Snyder in the past talk about the volume smile, right? When you look at just add volume histogram bars at the bottom of a chart, most of the volume is in the morning on the open, and then again in the afternoon on the close, and it kind of dips down in the middle where lunchtime it's we're all going out to lunch, and there's less volume there. So from a volume distribution point of view, it'll be interesting to see where volume start accumulating again at 2 o'clock, and then even more at 3 o'clock, and then even more at 3:30 in the power hour zone right there. Then we might see some differences in this volume profile. Again, unless there's some kind of news event or something going on. I'm going to add a fib line here as well. Fib retracement. I'm just going to go low to high. And I have the classic fib. I do not have the harmonic fib up on my screen right now. And I'm just kind of looking for areas of confluence, areas where two areas of interest kind of come together, right? And, the first kind of minor fib levels, that 23.6% level right there where my crosshairs is, we're pretty close to Jack's 4, which is, the fourth most important gamma exposure level, but it's also right by the top of the initial balance. That's that white line there, that first hour of trading. We're right there. So there's three kind of areas of interest right there. And then if you really kind of squint and use your imagination, you have the top of the value area for both pretty much both profiles right there as well. So there's a lot of stuff happening right here that I'm going to put a little, what I'm going to do? I'm going to put an ellipse here. I'm not giving anybody a trade idea or a hint. Not doing it. I'm going to make it white, though. I don't like this red ellipse. I don't know why it's red. And what I'm going to do is I'm going to apply it, but I'm also going to click on that template button. I'm going to hit that save button. And then I'm going to set this color as my default. I'm going to click on that default. You could have a whole bunch of different, this is where I typically would have a harmonic loaded in here, but I'm just going to hit save. It's going to ask me, are you sure you want this to be your default? I'm going to say yes. I like white better. So anyway, we'll see later on today at 2, as we go into power hour, this afternoon session at 2:30, I'll leave that up there to see if we achieve it or not, but I could be wrong. We could just keep on going. Firmament said, if you throw a fib over yesterday's initial balance, it's like a stencil. So here's yesterday's initial balance. This is that first hour. That's 19,460 down to 19,260, we'll call it. Close enough. Oh, I'm sorry. Yeah, that's exactly right. And just kind of even taking a step back further, that point of control from yesterday, not dominant by any sense of the imagination, is down here at that 78.5% retracement. All right, let's open that up a little bit more. So that's the story of the micro NASDAQ. I'm going to leave this just like this, and we will come back to it at 2:30. We'll see how it does. Let's keep rolling here, though. Let's just do the same exercise though with the E-mini S&P while we're at it. It seems like a lot of you guys are trading the NASI instead of the E-mini S&P, um, which is interesting to me because my market was always the E-mini S&P. That was the big one. That was the one everybody traded in the 2000s back in the day. So in any event, though, wow, look at this move up. I'm going to do the same thing. I'm going to add that. I'm going to right click. I'm going to add that order flow volume profile. You could also anchor an order flow VWAP, by the way. That's a whole nother conversation. Let's anchor the order flow volume profile. And again, 30-minute candles from the open till now, and just to see what kind of difference there is. The main difference, I think, is the area of support's changed, right? The area of support has changed. It's now a little bit. It's clear and present to me. And I'm going to go ahead and just do a rectangle. Where's my rectangle tool, Jim? Here we go. I'm just going to kind of look at this volume weakness. Prices below value here. I mean, there's no volume from the open here, right? So we had this huge candle up. It was a fast moving candle. And, this is really a volume deficit shelf right here at 56.43. So again, I don't expect us to get back down there today at this point. I could be wrong. But that's kind of my first observation. Now that I drew this new profile right here, the regular trading hour profile, if you will, and it's not a very good one, right? We have the volume node here, little baby volume node here, a messy cluster of volume here, and then the most recent little volume node at the top right here. So it's not really helpful for me from a where's the point of control point of view. It's not that big of a deal. Ty says, that's a good question, Ty. Ty's question is a good one. Does fibs go from candle to candle or wick to wick? Well, fibs are interesting things. I'm going to go ahead and add it. From my point of view, I use the wicks, right? So I'm going to use the low of this bar, the low price of this bar, which is about 56.10 and a half. Click once. I'm going to move it all the way up, right? I'm going in the direction of the trend, and I'm going to click at the top of the high wick. And my philosophy has been, so you could look at a wick and say, well, that was kind of a knee-jerk reaction, or stops were taken out, or it just, irrational exuberance, got us there. But in my opinion, Ty, a buyer and a seller did a deal there, right? So, up here at this, or let's just go to the bottom, this low. A buyer and a seller did a deal there, right? The buyer probably made out okay. The seller might not have, unless the seller was just covering a position, and the seller could have made out okay. But there was a transaction that happened there. So that's why I like to use it that way. But some folks don't. I get that. But for me, I think that's the way to go. I mean, even when you have these wicks that are just like wild wicks, right? Anyway, so just now that I've added that, though, let's take a peek. That 23.6%, that's a minor fib level. That's not a huge one. Not really lining up with anything. The top of the value area for both profiles is pretty close to 85, that 85 level. The 38.1% textbook is pretty close to the official point of control, which is approximately 65. So if this thing starts retracing back down, that area is going to be on my radar screen, that 38. We'd have to break through that Jack's 2 level, though, which is definitely something that could be done pretty easily. And it's right above that initial balance high. So again, second area of interest. Well, really, that's the first area of interest because it's the first one that we'd encounter if we do get a retracement back down towards this point of control where my crosshairs is right here, right now. And then other than that, Jack's 1 is pretty far south here. It would be surprising to me if we got down to that 5625 level today, right? I'm gonna keep I'm gonna put another. You know what I'm gonna do? I'm gonna get myself in trouble, but I'm gonna do it anyway. I'm gonna put my ellipse right here. And we'll see what happens between now between now and 2:30. Furman says he is Elon. Uh-oh. You should know more than me then. Well, you do know more than me. In any event. So that's kind of the picture of them. We're going to cover some more markets in a couple of seconds here. As a matter of fact, we're going to move into and talk about hot commodities in our hot commodities segment. And it's not a hot commodity segment without bringing in the fabulous Shy Girl. Shy, I'm ready for you. Hey, are you there?
Hello?
There
hear
you
me now?
go. Yes, I can.
All right. Fantastic. All right. Well, I kind of wanted to start today with 6E. I thought was interesting because not only are we seeing inflows into European markets, but we're seeing inflows into the euro. In fact, risk reversals, which is like a closely watched barometer of positioning, shows that investors were the most bullish the euro over the time span since late 2020 on Monday. So looks like traders are positioned very long 6E. So what is that chart looking like to us?
Yeah, I mean, this is a great chart. This is a great chart. A couple of things happening here. I have an anchored VWAP starting from the end of February. So this is pretty much tracking all of March and into April. And we can see the big rally, and that white line is that anchored VWAP, and we can see it touched perfectly, almost perfectly, I should say, on the 27th of February, so toward the end of the month, but we didn't sell through it, right? It held as support along with that 21 EMA. And at that point, the 21 EMA and the 8 are kind of going parallel, slightly upward. This area of resistance that we had for about 7 days around 1.0871, we broke through it decisively today. This is a pretty big candle. It's not the biggest candle on the chart right now, but it's one of the bigger ones, and there's no wick at the top of the candle right now. So you're right on point. Buyers are getting long the Euro FX versus the US dollar.
Definitely have some big moves today for the currency markets for sure. Then we had crude inventories this morning. Huge build. Market didn't care. In fact, last night, API reported, and we also saw a 6 million barrel built, and EIA came back and actually had the same number, which I was shocked because that so rarely happens that they both have the same number. But crude's still green today, brushed it off. Ever since we kind of broke your hamburger bun area, it's just kept on going. As soon as we were able to kind of pop that 70 area after we had several tries last week, and then we're able to bust through that decisively. So are we going higher? What did the chart look like to you?
To me, it's, crude's always tricky. It's always a tricky thing because there's so many moving parts in crude generally. But from a technical point of view, we had that. Not only did we break out above my area of resistance, and we have a nice kind of moving average cross up where the 8 EMA or the fast moving average crossed above the slower 21 EMA, and those two are continuing to separate. And so the other two observations I have is we're right at that 200 simple moving average. And then we have some recent higher highs up here. I'll go back to early February where I would draw probably another rectangle. If you give me a second here, and there's a couple of different I don't know, steps involved. That's the further step. And then the closer step is going to be down here. So these are going to be areas of resistance until they become areas of support. And my first inclination is, hey, I wouldn't be surprised if we saw 72 spot 60 to $72 and to $73 in that area based on this flow that we're seeing so far. So it is looking a little bit bullish. Plus, we have a big wick at the bottom today, which is telling me buyers, probably based on the economic release, that buyers are back in charge of this market.
Well, and it seems that, and I totally agree, especially when we see some kind of these big builds and the market doesn't react to it. But what's also very interesting is that this market has been more short than it was in 2020. So there were a lot of shorts in this market, over the last few months, but specifically this year. So we have lopsided positioning as well if you look at the commitment of traders. So, the higher this market goes, the bigger the moves could get if they're squeezing shorts out of the market, obviously. And let's go to Bitcoin.
The Bitcoin.
That's another one that we've been paying very close attention to this one because it looked like we were kind of going to drop off there, but it seems to have been making a comeback. And what's really interesting is it's moving with indices today, like almost tick for tick. So is that bearish move over? Are we going back higher? What does this chart look like to you?
Yeah, I mean, so that's a great observation. It's moving in step with the equity market, and that's kind of observation number one. Observation number two: when I look at the currency pairs, and I'm gonna call Bitcoin a currency pair. It's a cyber currency, I guess.
Uh-oh.
And it's I know. Well, I'm gonna just for the sake of my argument here. Hey, bear with me.
I like it.
So the dollar's down against everything except the yen and the peso, which are tariff targets. And so I'm not surprised to see Bitcoin priced in US dollars up today, just based on that phenomenon. But we had that nice trend channel on the technicals, and we're getting back into that trend channel, right? We're getting back into that trend channel. The 8 EMA and the 21 EMA, I know I talk about these every day, but they're kind of important levels to me on a daily candle chart. They're pinching, they're getting tighter together. Maybe they'll cross, and maybe that'll give the bulls anyway some a better feeling that we could drive back up to that old area of support, which is going to be now resistance in my mind anyway, around 95,000. But we have some work to do to get up there. These aren't really big, huge candles like this one right here we saw, at the beginning of March. So Bitcoin's taking a more cautious approach lately. But yeah, I mean, I think I'm a little bit bullish here. And just let me say one more thing. When I talk about my turnaround dojis, and again, they don't always work, but here's one right here. Now it's only a few days worth of sell-off that we got that doji at the bottom. They sometimes give you a signal at the top of a move or at the bottom of the move. And so that helps me think about, well, we have a confirmation candle and then some. So yeah, I think we're moving higher a little bit here.
Yeah, and it was interesting that we had from that kind of low around 50,000 to the high of 110,000. We really did make a 50% retrace, which I find is really interesting, particularly if it holds. But interesting spot, and it filled that gap the gap from October.
You're going way back
now.
in time. Okay.
Yes,
Yeah.
I know. I'm way back in time. Bigger picture. Let's go to gold. Of course, we got to take a look at that. That market's still humming along. What's interesting is, we've had the indices kind of move up. Gold is still moving up. So, I'd like your thoughts on that, because it's, kind of a risk on plus a hedge trade that's kind of going on today. What are your thoughts on that? And, kind of looks like clear skies above for gold at this point.
Yeah, clear skies above. I've kind of changed my point of view from this morning a little bit, because the treasuries kind of sold off a little bit. My thinking this morning was, all right, money's flowing out of the equities into gold, out of treasuries. That's kind of reversed, at least with respect to the equities and the interest rates. Now it's, we're moving on up in the equities, we're moving down in the treasuries, but gold is still positive. It's still strong. We still have a pretty strong green candle today. We're up $19. It's not earth shaking, but we're trading above that 31.50 level. And there's no sign, and this is what surprises me, Tracy, there's no sign of a retracement back down. I mean, we have a series of higher lows. Today's the first not higher high in a while, but the day's not over yet. So I'm not interested in hitting the sell button here. We still have some targets on the upside, and this might play itself out well past the tariff announcements.
Yeah, it would be interesting on the reopen tonight, right? The 6 o'clock open. So we'll see what happens. It will be interesting. I find it interesting that Trump, even though he says he doesn't really care about the markets, did change that announcement from 3 p.m. Eastern time to 4 p.m. Eastern time, conveniently right after the market closes. So I'm just going to throw that out there.
If he doesn't care about the markets, I have a bridge to sell you in Brooklyn.
Right. And then let's do a new one, because I was looking at this chart and it's just amazingly strong, and we have never talked about it. So let's take a look at live cattle.
All right.
Check this chart out. It's been like. Yeah. Go ahead. This chart's been. I was just going to say this chart's been straight up for months. But what are you seeing here? I mean, it almost looks double toppy here, but I don't know. What are your thoughts?
Yeah, I mean, this was not on my radar screen until you pointed it out this morning to me, to be honest with you. And the commodity markets are often ignored. I think it's not right. I mean, I think some of these commodity futures are great. And when you pointed this out, I immediately just kind of drew a double top here. Now, my data doesn't go back that far, but it's from January, end of January here. And this is like the ultimate V-shaped recovery, right? We have a really nice low, really big wick at the bottom here on March 4th. All the moving averages are just almost straight up. This is pretty strong. I wouldn't be surprised if we broke through this double top on a daily going forward here. And one of the questions I was going to ask you, I read somewhere that live cattle, the inventory of live cattle in the U.S. is like the lowest it's been for like forever.
Yes, it is. We definitely have a problem. A lot of that started during 2020 when prices fell through the floor. Farmers couldn't afford to keep their cattle, so they sent them to slaughter early, and that thinned the herds, and it's never really quite recovered from that. As well as everything's kind of more expensive to run a farm right now, and so that is affecting farmers. Not only ranchers but farmers as well.
Yeah, that totally makes sense. And this is not to be confused with feeder cattle, which is a different. It's not a different animal altogether. Yeah.
Yes.
Yeah.
So, but
But
this is
anyway,
kind of a scary chart if you're thinking about going to the grocery store, right?
yeah, yeah, no, for sure. I'm thinking I got to tell Bobby Iacchino to stop eating so much red meat. Maybe that'll help a little bit.
It's all him. It's all him. All right. Well, Jim, thank you so much. It's been awesome. And I will see you tomorrow on Hot Commodities.
Awesome. Thank you, Tracy, so much. We're wrapping up the morning session, everybody. Thanks for being with us. And remember, we'll be back at 2:30. And we have the order flow edge guys trading the close. Remember, it's Leo and Nick. I have it right this time. Leo and Nick. So hopefully we'll see you at 2:30. In the meantime, get some rest, have some lunch. Thanks for being with us.